into the level price action combination. I'll look to take it. Risk is that 588.13. Lines up with the things you're looking for. Take it, but just understand that there's nothing that has a 100% win rate. Okay. See if we can come a little lower. We're below VWAP 1. Hourly does have that wick. Right, hourly does have that wick. Or below VWAP 1. Let's see if VWAP 2 holds. Okay, if we get some sort of price action combo. Okay, so I can take it there. Back to the upside. Risk below PMH. Okay. I got feel for the puts instead. Hold on. Okay, let me take it there. Okay, took the calls here. If it breaks below the 50% retrace, then I'm out. If I reclaim that 588.56, should be good to go. Okay, starting to go up 4%, 5%, 7%. If you did take this, manage accordingly. See if I get one more push to the upside. Okay, let's see if we can get back above it. Did see 7. Right, risk is that 588.23. If you did take this, manage accordingly. Okay. Contracts are actually moving nicely today. ATR is close to $1. See if we can get back above that 588.56. 588.56 would be great. Get back above it. It's up 3%, 4% now. So basically I want VWAP 2 to hold. VWAP 2 to hold. I don't want to close below VWAP 2. Okay. I'm going to take some off right there. At 10. Filled at 11. Down to runner. Okay. Go down to runner. So took some off at 10 already. Down to runner. So when the ATR is like $1, price moves nicely. So depending on where you got filled, okay, I still have this runner left. If this runner breaks below that 588.23, I'll exit this runner. If it holds, great, but I already extracted what I needed. We are seeing some weakness on the hourly. So if you're playing the breakdown, I'm gonna close this runner right here. Okay, I'm gonna close this runner and basically break even. If you're playing this breakdown, break below that 588.13 possibly, but we need to clear through it. We need to clear it. Okay, just be very careful of that pre-market high, pre-market low. Okay, now we're starting to break down. If you took it to the downside, retrace, reject. If you're waiting for the orb was all the way at that 587.72. 587.72. Orb is all the way down there. That purple dotted line is the monthly open. Okay, if you play the orb, break and hold, you have room into 587.16. But keep in mind 10 o'clock. 10 o'clock we have a catalyst as well. So nice little scalp here. How are we looking, guys? How are we looking? If you're playing the orb break to the downside can potentially play out. We're below both VWAPs. So that suggests that we're bearish, and look at that hourly candle. That orb, I'll take that retrace reject. If we break below that that monthly open, retrace reject, orb low coincides with that monthly. So I'll take it to the downside on that retrace reject. As room into that 87.16. That hourly candle looks very, very bearish. All right, you can see the wicks. You can see this. If you took the orb off the break, manage accordingly. I'm waiting for the retrace reject. See if you want more pump to the upside. Nice breakdown. Who took the orb? All right, the orb is paying. So this little scalp that I got, right, even though we were on the verge of a sell-off, was still able to squeeze a little bit off just by taking profits. VIX is turning back to the upside. What a breakdown. What a complete collapse. So we open up, we're bullish, and then the bears combat that and push it back to the downside. Now VIX is starting to turn back to the upside. We're below the 50% retrace on the daily. Time and sale starting to speed up. How are we looking, guys? Anyone in puts? Anyone in puts? To secure your profits, okay? Inputs, waiting. That was a beautiful dump. Wow, that orb break and hold played out beautifully. Played out beautifully. So we're in a clear downtrend here. Look at that, guys. Look at that rejection on the hourly. Couldn't hold above the 50. Made plus 21%, bought one, 41, sold out to 52. Didn't have the balls to hold. You made something. 21% is great, especially with the ATR moving with a dollar ATR. Right, within 5 minutes, you can make $50 with one contract. Okay, with a 50 delta. Okay, so that's really good. So with a dollar ATR within 5 minutes, 50 delta, you can make $50 per contract. Uh, 20%. Beautiful job, Carlos. Beautiful job. Couldn't get filled. Yeah, it happened fairly quickly. I'm still waiting for the retrace. I'm still waiting for the retrace reject. There's nothing for me to really take. Right. So it was good that I took the profits here. Short-lived, but I'll take it. So this just goes to show you, if you're directionally right, you're going to get rewarded handsomely. You still could be directionally wrong and still squeeze out a scalp. Worst case scenario, you get stopped out right here. See if we can retrace into that 587.75. We have a catalyst, guys. We have a catalyst at 10 o'clock. Okay, we have a catalyst at 10 o'clock. Red folder, ISM manufacturing PMI. All right. But what a dump here. So to kick off June, we gap down, we fill it, and then we just take this thing back to the downside. If you look at the VIX. VIX is starting to pick up some speed. If the VIX gets back above 20, okay, this thing can really start rolling to the downside. All right. So let it clear out in the next 4 minutes. We have ISM. So that's that daily 50% retrace. Bulls are trying to step in here. All right, please don't chase. All right, if you look at the 5 minute here, right? If anyone knows what the tweezer bottom is, that's what the tweezer bottom. If this 5 minute candle holds, if this 5 minute candle holds above that 587.16, we're getting some tweezer bottom action. Tweezer tops and tweezer bottoms. True. Thank you for endorsement. Yep. How we doing on Google Meets? Anyone catch the orb? Anyone catch that scalp to the upside? No positions. What is it looking like, guys? Let me know. How we doing so far? Okay, that retrace reject is coming. Only issue is 10 o'clock. Right, retrace reject, and that 9 is trailing into it right there as well for the early entry. 14% puts twice. Beautiful job, Jace. Bought both sides, sold them. Beautiful. Slayer White, bearish. Great job, guys. Great job. And this is a retrace reject, okay? So the only time I like to move in averages is when they're close to a key level and a clear trend. Right, so this little push here, again, guys, keep in mind, we're moving about $1 per 5 minutes. So you just need 1 or 2 candles in your favor with the majority of your position. So we're about 2 minutes out from the data. Keep in mind 586.08 is that yearly open. We've enjoyed that level multiple times in May. So I want to see how we interact with that level. And now we're starting to encroach, all right, into some into a TOG, right? From last week. That was a nice retrace reject. Anyone catch that? Stick to the plan. Wait for the retrace. 100%. Couldn't get filled. Retire final. Okay. Small puts. What is a tweezer bottom? Sorry, ignorant about it. It's basically when you have 2 candles, and at the bottom of both of those candles, we have wicks. We have wicks that are relatively equal, of equal length at the bottom of both candles. Right, but it didn't play out because that 5 minute candle was we're still in the middle of that 5 minute candle. So with the price action combinations, guys, you're gonna have to wait until the candles close. The downside of waiting for candles to close and waiting for confirmation, right? There's an upside, which is you're trying to be as safe as possible. The downside is you don't have the best fill. You often have the best fills when you're buying. If you're taking puts, you often have the best fills when you're buying into strength. If you're taking calls, you have the best fills when you're buying into weakness. The reason why I'm able to squeeze 8%, 10% in this territory is because I'm buying into weakness. So any pop, as soon as it wicks back to the upside, right, I'm already at double-digit territory. But if you wait for the confirmation, right, which is also valid, right, you're not gonna have the best fill, but you're confirming. Oh, look at that, guys. If anyone has runners, look what level it came to. Now it's flirting with that yearly open. Okay, PMI data just hit the wire. Okay. PMI. So the PMI data. So ISM PMI, it's pending. I'll give you the data as soon as I get it. So manufacturing prices, ISM, previous forecast previous reading 69.8, forecast 70.2, actual 69.4, below forecast, below previous reading. ISM manufacturing PMI, previous reading 48.7, forecast 49.3. Actual reading 48.5. So both ISM manufacturing PMI and ISM manufacturing prices came below forecast and came below the previous reading. Look at that complete breakdown. My goodness. If anyone is in puts, oh man, look at that. Now we've completely given up. So that retrace reject, right? That probably would have been maybe the trade of the week. All right, so now as we're approaching this 20, that's going to tell us a lot. That's going to tell us a lot. If we get above that 20, continue to accelerate. Right, we can see a complete potential collapse here. Continue to sell off. If we can't hold on the hourly, if we can't hold that 584.83, that 200, and look on the hourly, we have a new hourly candle. We went 3 up, 2 down. So essentially a rejection off that 50. So in the pre-market notes, we talked about if we can't get above those pre-market level, those moving averages, we can see a rejection off that 20 or that 50. Okay. So my approach here is I'm seeing price continue to sell off. Okay. The only key levels I have in the territory are the yearly open, that TOG, and that 585. So the approach I can take here is I need some sort of accumulation breakdown. Maybe use that yearly open, but there's no key level I can pin my stop to or my risk. Okay, so maybe wait for that moving average, or maybe just pay attention to how we interact with that yearly open. 55% of puts. Great job, Lynn. You took it off the retrace, off that 9. Great job. You took the risk, and you benefited. Waiting for the retest of the orb, previous day high and low. Those will be my main plays during June. First 2 sessions, looking for a clean retest into levels close. Great job. Profit on put. Great job. You guys are absolutely crushing it. But look at that, guys. Like they dump this thing, they pump this thing off the open and just completely dump it. Right? So we sliced right through that yearly open. Now, from a yearly perspective, we are red on the year. If you want to use this 40-cent stop, since the ATR is so large, look how tight that stop has to be. Okay. I might like that retrace reject off that yearly open. If we can get continued strength. Okay. See, I can take the puts there. Off that yearly open. So I wanted to stay below that 586.34. It's a shallow retracement. I'll see if I can manage the risk. Down 4, down 6. I'm going to cut it right there. Right, stopped out at 12. Right. Wanted to see if I can get that shallow retracement. If we fall back below that yearly open, I can re-entertain it. Okay? For that retrace reject. See if I can re-entertain it here. One more time. Okay. See if we can hold below the 586.08. If we can hold below 586.08, that'd be a nice retrace reject. Right. Stopped out at 12. Okay. Back into position, using that yearly open along with that 9 to see if I can get that shallow rejection. If we can fall below that 585.71, that would be fantastic. If we reclaim that 586.31, I'll probably part ways with this position. Up 4, up 6. Okay, see if we get that continued push. If you took that retrace reject, again, manage accordingly, take profits where you need to. We are taking it right at that near that 200. Okay, so very important to know where we're taking it. See if we get that clean flush here. Okay, nice. I'm gonna take some off right there. Okay. See if you can hold below 585.71. See if you can hold below that blue dotted line. Okay. I want continued strength on the VIX. I'm going to use this 9 as my trail. Did get all the way to 10. 65% on retrace, retest. Good job, Slayer. Beautiful job, guys. If we get back above that yearly open, I'll close this runner. If we break below 585.71, we have a nice runway into 585 into session lows. Okay. Okay, up 10. So the moves are volatile, guys. The moves are volatile since the ATR is so wide. So I'm gonna close that last one right there. Okay, already extracted profits here, and then closing it there. If we can't get above it, I'll dip in again. If we reject off of that, get below 585.17, I'll take it again. Right, but just this little tiny move, guys, you can see the percentage gains are very, very large because of the ATR. So 1 or 2 candles in your favor, 65% on puts, profit on put, book profit. Those projections were recessionary and we missed. This is concerning. Books and profits on puts. Great job, guys. Again, we're still early on in the day. Early on in the day, it's first shift. Look where we are now on the hourly. We came into that 200. We came into this support, and now it looks like we're bouncing. We're getting back above that yearly open. Okay. We're getting back above that yearly open. So make sure you're taking profits. Don't fall in love with those large gains. Again, for me to take this back lower, I need to break below 585.71. If you're waiting for another retest of that yearly open, not yearly open, and that a monthly open, that's all the way up there. If you're playing the reclaim, right, manage accordingly. So basically break even here. Stopped out the first attempt, worked out second attempt. So a shallow retracement. There was that scalp opportunity. Take this off. We're back above yearly open now. VIX is rejecting off that 20. Out 63%. Beautiful. Wow. That was intense. Yeah. Be very careful, guys. Be very careful if you're trying to chase it back to the downside. We'll reclaim that yearly open. We would reclaim that yearly open. We're back above it. SPY did push into that, near that 200, right? Seeing it back above that 9. We're at the 50% retrace on the daily. We're still inside on the daily. A very nice pullback. More puts. So we're at that 50% retrace of the day, on the daily. We're starting to see buyers trying to push this thing back higher. We're below both VWAPs. Continue to push lower. See if the bulls want to step in off that yearly open. 586.08. What a way to kick off June. Make sure to like the video on YouTube, guys. Make sure to subscribe. We have more catalyst. Okay. It's a little bit later. We have a catalyst at 1 p.m. Powell will be speaking. At 9:45, what the final manufacturing PMI? That's what it was. Final manufacturing PMI. So now the VIX is kind of jammed between that 20 and that these lows here, 1890. So most of you were able to make your profits here, right? That retrace reject was probably the best way to re-engage, right? In the face of some catalyst. So if you took the risk, you got rewarded. I was a little late to the party here. Tried to see that if I can get that shallow retracement. Stopped out once, right? And then worked in my favor here. Temporarily couldn't get below that 585.71, and now we're basically between the yearly open and that 50% retrace. Right, on the hourly, looks like we're struggling to get above that 587.25, which is that 9. So if you made a good return here, guys, during first shift, shut it down for first shift. Don't open yourself up back for more risk. Shut it down for first shift. You can kind of see this. Why is my 20 green? It should be yellow. My 50. Okay, potential breakdown here. But we got to overcome that 586.08, that yearly open. You have to overcome that yearly open. Not me, stopped out 4 times, 0-4 today. As long as if you're getting stopped out, that's not too bad, guys. If it's within your risk, getting stopped out is not too bad. That retrace reject coincides with the VWAP, both VWAPs. That yearly open, that or multiple things. You can use that 50% retrace on the weekly as your stop. So if it turns into a reclaim, you get invalidated. If you think there's more juice to the downside. If you think it's a reclaim because the VIX is showing weakness and rejecting off that 20, you can do the opposite. It just depends on if you think we're going to reject here or if you think we're going to reclaim. If you think we're going to reclaim, you can use that 50% retrace, okay, as your risk. It's about 62 cents. So basically everything is going to be related to or tied to the monthly open, 587.75, and the two VWAP 1 and VWAP 2, and how closely they align with that key level. Make sure to like the video on YouTube, guys. Make sure to like the video. We're on episode 58. Okay, we're quickly approaching episode 100. Quickly approaching episode 100. Right, the next setup I'm looking for is that 587.75 reject. So if we get above 50% retrace, I get invalidated. And I can kind of play into this breakdown. So how are we doing so far, guys, on YouTube? YouTube, what are we looking for? A lot of you caught the push to the downside. Push to the downside. Looks like we're having a hard time getting above 587.16. I'd prefer it to come a little higher. If it breaks down shy of that level, it can take place. Right, for some reason my 50 is showing an error. So basically we know where the orb is. Let me take this off. Where's my trusty 50? Okay. Another reason why I like it. That lines up with the 50. So I can potentially use the 50 as an early entry. So hopefully this thing doesn't break down here. VIX pulling back a little bit. I wanted to continue to climb, get above 587.16, Ideally, in the perfect world, get above it, come here, and then just start collapsing back towards that yearly open. In a perfect world, that's what I would like. Okay? That's how I want it to play out. If that does start playing out, does it have to get to this point for me to take profit? No. I'm going to be taking profit as soon as we get into that 587.16. All right, with an ATR of 1.03 points, right, you can easily make $50 on a contract. Okay? Again, if you're already green, you don't need to take on more risk. A lot of your goals were to take X amount of trades within a shift. All right? So the less is more. So technically, if you stop today, you will be green for the month of June. Right? But of course, we're going to continue trading. So just know you have a good start and just build upon that. Build upon that. If you do use the VWAP in the 50 as an early entry, right, you stretch out your stop, it's going to go to 60 cents. Again, this is for reference, right? So multiple key levels there, multiple EMAs along both VWAPs and 50 along with that key level, 587.75. Okay. So in this case, I want this to be like a dead cat bounce or a relief bounce that turns into a larger breakdown. Waiting for orb retest. I'll try some more puts at 587.70. Yeah, basically in that territory. Missed the big puts, took a couple of small retrace, plus 2% on the day. That's beautiful, guys. That's a good job, Matt. 2% more than Friday. Okay. These ones, the people who executed here, right, they were there for it. They took advantage of the opportunity. But if you missed it, I didn't get a piece of this, right? I was actually going the opposite way, right? Don't let that blind you for the next from the next opportunity, right? I missed this big breakdown. Okay. Powell speaking at 1 Eastern. Interesting. Yeah, he is speaking. I'm not sure what the context is. Retired final. I know he does these events here and there. As far as news is concerned, let's take a look at the news feed. Anything hit the wire? Any tweets? Boulder to... I'm trying to keep the news feed as closer related to the market as possible, right? You guys already know I'm not a big fan of news. Okay, let's see if we can get a little higher here. Okay, I'll take that early entry. Back to the downside. Okay. Okay, up 5%, 6%. If you did take this, manage accordingly. See if you can fall below that 587.16. Up 9. I'm gonna take some off right there at 14. These things are moving beautifully. Take a little more off at 15. Down to runner. These things are moving beautifully, guys. When the ATR is at 1, right, this thing is moving beautifully. Up 22%. Okay. See if we get a complete collapse here. Already locked in profits at 13, 15. Runners up 22, 23. 25. I want some follow through here. Some follow through will be great for that complete breakdown. Up 28, 29. Close below 586.93. This thing can start rolling into 586.08. Okay, 27. If you took this, manage accordingly. See if you get that continued slide. That 20 is giving us a hard time. If we get back above that VWAP, I'll close this runner. I already extracted profits. Okay. Up 12 on this runner. 10. See if we can just collapse here. So beautiful retrace reject. Preferably I would like it to stay below 587.16. That 50% retrace on the daily. I'm gonna lock in the profit there on the runner. okay, at 8. And if it sets up again, I'm gonna double dip, okay? So you see what I'm saying? You don't need a full breakdown into target. All you need is, since the ATR is so favorable, you just need a couple of candles in your favor. And you saw we did peak at 28, okay? Anyone squeeze that? Anyone take that? If it sets up again, I already extracted profits. If it sets up again, I'll double dip. Only concern here is this can the VIX is starting to push lower. Okay? And this rejection off that 20, now what it's looking like, this rejection off that 20 is lining up similarly to this reclaim of that 586.08 and that near that 585 bounce. If this thing starts breaking down, if we get below 587.16, right, I'll look to take it back to the upside, downside. So there's a critical juncture here. Critical. Do we reclaim or do we fail? Do we reclaim or do we fail? So we're about 8 minutes away from first shift. Look at that hourly candle. Hourly candle starting to pick up some steam. Nice bounce off that 200. Okay. If we hold above that 587.75, this can turn into a reclaim. If it turns into a reclaim, we'll flip the direction. Okay. So that's the third trade. Nice little rejection there. This is, look at that reclaim. So we have a lot of fuel off of that 585 in that yearly open, right? And now the question is, does this push us back into that 590 territory? Yep, I had a couple of bad days over trading, making bad decisions. Was the first time having consecutive red days. 3 straight green days now. 3 straight small green days. Absolutely. Just pile those green days up, right? And what happens is sometimes we have those small green days, medium green days, and we have that one day, that one red day, that's just a big red day and it wipes everything out. Okay, so it's very important to just put any measure in place. Okay, just to make sure you're not taking those big losses. So if you're stacking up a couple of green days, 3-4 green days in a row, you have green weeks here and there, and still are taking those sporadic big losses that wipe out the entirety of multiple days of work, right, is directly tied to just not cutting the trade early. Even if it means just cutting it early, not even letting it play out to protect your downside, you're going to have to do that. And that's very, very frustrating. All right, so even if it means just cutting it early, even though it's going to leave you behind, right, for the sake of protecting your profits from the previous days, it's very important. Or maybe it's the sizing. It could be a sizing thing, or maybe we're using too much size. Thank you for the guidance. I'm shutting it down for today. Yeah, you did your work. Right. It's like if you go to work, if you say you work from 9 to 5, okay? You work from 9 to 5. You're done your work. You're not going to come back at 7 p.m. to try to do more work. You're not going to sneak back into the office and try to get more work done. Right? Okay? It's just once you're off the clock, you're off the clock. So that's the hard thing we have about trading. We don't know exactly how long we're going to work for on a particular day. Some days can be 30 seconds. Some days can be 2 minutes. Some days we're going to have to fight. We're going to have to fight just to survive. Right? So if you have those days where you catch a 40% banger, 60% banger, right? That's a little bonus. Just don't take any more trades. That's the key. Sneak back in, sneak out. Exactly. So treat it the same way. Okay? I'm using a new platform. I'm not limited to the trade, so discipline needs to, exactly. The discipline is critical. So we're back above that monthly open now, right? That 587.75. You can kind of see how this rejection lines up with this reclaim of that yearly open and that 585. So as long as we continue to slide, guys, we're back to the upside. Right? They're taking everyone on a roller coaster ride. Look at that. So the best approach in this case, right, is bounce off that 587.75. Okay. Again, these are just little scalp opportunities. And if you've been taking into trades, you can see how quickly when you're in profit, you don't need a lot of these candles to start stacking up, because you're quickly in profit. But at the same time, you need to understand this: if you're holding for too long, it's a matter of seconds before you go from down 8% to down 25%. So same logic applies on both ways. It's a double-edged sword. So ATR is a double-edged sword. Right? It can work in your favor fairly quickly, or it can work against you fairly quickly. So you have to have your finger on the trigger. Okay? Now we're clearly pushing back to the upside. Of course, in hindsight, everything makes sense. We can clearly see we came near this. Right, we came near this 200 on the hourly. We're above the 50% retrace on the hourly. Look, we dumped here. We pumped, dumped, pumped. Okay. So essentially creating a broadening formation. And we're essentially back above where we started. We have a lot of traffic here, so this can be a low probability environment. If you're using further dated contracts, maybe you can sit through a little bit of the volatility. The next runway I do see, guys, is if we can get above 590, hold above 590, we have a runway into 590.86. If we can hold above 590.86, right, this is what needs to be addressed. We have rejections, multiple rejections up here, rejection. So when we encounter it for the first, second, third, fourth time, if we can break out of it and hold, we have a nice runway above that 591.12 all the way into 595. Doesn't mean we're gonna get there in one shot. No, it just means we're gonna gravitate towards that level, right? As long as we stay above that 591.86. Okay. So think of it like that. All right. So technically now we're green on the month. Technically now we're green on the year. We temporarily were red on the year. Rubber band candle on a 5, watching. So is your rubber band candle retired final when you get a break above the VWAP? Is that what you're looking for? Books and profits on a call and calls, but I love the way the contracts are moving. One ATR, it's right. To me, that's the best conditions. All right, let's say between like 90, if the ATR on the 5 is about 90 to $1.20, right, really, really good. You get some really, really good moves. When the ATR is like 50, 60, 40, you got to sit through some. Nice trade. Great job, Panther. Again, guys, make sure to like the video. Make sure to subscribe. Okay, smartactiontrading.com. Take advantage of the weekly pass. Lock in your June. June is a new month, right? If you want access to the entirety of the server, $49 a month. Can't beat it. Okay, can't beat it. Books and profits on call. And make sure you're liking the video on YouTube. So as we approach this level here, remember I took the calls up here. So just for entertainment purposes. So imagine if I took the call here. What kind of drawdown do you think I'm sitting through here? 70, 80, 90%. And by the time it comes back here, it's still going to be negative. Right? It's still probably going to be negative because of the data. Unless for it to be positive, if you're holding the calls all the way from here, it probably needs to get above that 589.25. I'm so tempted for greed. Only one trade today, Slayer White. But you crushed it, right, Slayer? Yeah, 65%. Right? So you might have the biggest. It comes down to, I think, you and Lynn. Right? I think you and Lynn absolutely have the biggest percentage gain of the day. 63, 65. I was able to squeeze out, lock the profit at 14.15. But at peak, that rejection did push into 28. Right? But great job, guys. Some monster numbers today. Yes, rubber candle now. Waiting for next candle. Okay, I see. Is that on the 10-minute retired fight or the 5? Okay, on the 5. Okay. Okay, so now the question is this. Does the VIX double bottom here or does it break down? If it double bottoms, okay, you know what to look for. If it breaks down, you know what to look for. So now, basically, you can do this. The beautiful thing is when you have these key levels, you can use these key levels as your stop. It's called measured risk. Right? It's really difficult to have measured risk when you have no levels below you. Right? So whenever you have a setup, you want to get invalidated. It's either works or you get invalidated. You don't want there to be too much gray area. So what I mean by that is, say for instance, if you play the reclaim of that 50% retrace, right? I mean, you can have a 40-cent stop, or say a 50-cent stop, but it's kind of in the middle of nowhere. So this stop is kind of, I mean, yes, it's a stop, but there's no logic behind it. Okay, but say if you say, hey, you know what? I'm playing the reclaim. My risk is the TOG, right? So this is a measured stop. So from point to point. So you know exactly, hey, I'm going to get validated at this point. Invalidate or validate at this point. So we continue to climb. Once we got the data dropped at 10 o'clock. We pushed near that 585. We reclaimed that 587.71. Got back above that 586.08. And now we're basically green on the day. So we're in second shift, guys. Keep in mind, we're in second shift. So again, do your checks. Okay, checks and balances. Okay, so first shift, how did you do in first shift? How many trades did you take in first shift? Okay, let me know in the chat if you're between 9:30 and 10:30. If you're green on the up to this point, put green in the chat. If you're yellow, you took no trades or break even, put yellow. If you're red, put red. Okay, now going into the second shift, you need to make the assessment. Do I need to put on more risk or am I done for the day? All right. Wait for those retests on the R, previous day high. So tempting. Yep. How are we looking on YouTube? So we're already in second shift. So took 3 trade ideas. So 3 trade ideas for a trade, stopped out 12%, got back some of that stop out here before it skyrocketed back to the upside, and then took this for a nice double digit gain, took this for quick pop to the upside. So green on first shift. But of course, just like anyone else, I have FOMO on this complete breakdown. But the ones who should capitalize, the ones who should have something to show for this are more than likely the ones who played the OR break or that breakdown of that monthly open that coincided with that OR break. So when the OR lines up with one of our key levels, more than likely this thing is gonna explode. The hourly, let's check back on the hourly. The hourly, guys, is above the 50% retrace. So this hourly candle still has about 25 minutes left on it. There's a good chance this hourly, just went back. The hourly just went 3 up because we just broke down. Did you see that candle? Who saw that candle? That impulsive candle. So we took out first shift highs. We took out first shift highs, guys. So let me take off this couple of these moving averages here. Starting a little messy. We took out first shift highs by that impulsive candle push higher. So let me know in the chat, guys. If we're green, red, yellow, do a thorough assessment. So tempting. 1 green, retrace, reject on a 5 to my 5 setup list. Great job. Yeah, you saw that, guys, right there. They grabbed those highs up there. So they filled those orders. Keep in mind, we know what kind of relationship we have. Price has a toxic relationship with 590. Okay. There's a lot of back and forth. All right. It comes back. They come back together. They separate. Come back together. Separate. Just a lot of volatility. Okay. So we need to move on from 590. Right. We need to find another key level to gravitate towards. Okay. So price needs to find another key level. Probably a bunch of people took puts at the top. I'm guessing manipulation. I have nothing to back it up though. Yeah, just liquidity grab. First shift liquidity grab. So what ends up happening is there's a lot of orders that need to get filled back the upside. A lot of pending orders back the upside. They fill those orders and then just dump. Okay? A lot of pending orders up there. Manipulate. A lot of traders are taking that break. Manipulate. And that coincides with this double bottom fail on the VIX. So to be honest, I want price to clear this territory. A lot of traffic, bumper to bumper traffic there. Beautiful. Breakdown of the pre-market high, JB. Great job. Oh, great job. 50%. Great job, JB. On YouTube, red. So if you're red up until this point, again, go to your setups. What setups are you going to use? Right? To put yourself in the best position to get a trade to work in your favor, not to recover all your losses. Okay, just to get a trade to work in your favor. Green, great job, Elaine. I think most of you should be done. Most of you should be done. The ones who got 20, 30, 40%. The next trade you take, size extremely down. Okay, protect those profits. You're going to need those profits. That's going to be cushion for the week, all right? That's going to be your cushion. So we grab first shift highs. We'll push it back to the downside. So make sure you do your mental check. This is all stemming from what, guys? The 20 rejection. VIX comes into 20, rejects, coincides with that 585 bounce. Reclaim that yearly open. Yeah, size down. If you're green, just size. You'll thank me later. Okay, just size extremely down if you're still looking for some setups. Okay. 60, 40, 50, 40% plus gains. If you've been trading long enough, right? You don't look for those every day, but when they do come, you enjoy them. Look at that. Look at that. First shift liquidity grab. Some manipulation taking place here, guys. A lot of traffic in this territory, so let it play out. So if one of your goals was quality over quantity, if one of your goals was to trade less, this kind of condition is something you want to kind of avoid. All right. Especially with the ATR at 1.4 points, it just takes one candle or half of a 1 minute candle for you to be already down 10-15% if you're wrong. Okay. So awesome job, Lynn. Did your work. So let's see. Let's see if that yearly open. Look how close we got to that 590. All right, look how close we got to that 590. Oh yeah, and this week, for everyone in the community, everyone on YouTube, this week, 2 days we're gonna have to delay the stream, right? Tentative. I'm not sure if you saw the message. I'll probably pin it to the chat. Right, this applies to YouTube as well. This applies to YouTube as well. Where is it? I put it in yesterday. Here. Okay, so Wednesday and Thursday, there's no pre-market program. All right, so it's gonna be a delayed start. The exact time we're going to start depends. I'll just let you guys know, but probably second shift, third shift, and beyond. and we'll probably go to close. Okay, so very important that you understand. No pre-market show, no pre-market stream during Friday and Wednesday. So I will give you the pre-market game plan. So during this time, I encourage all of you guys, challenge everyone in the community to collaborate. Okay, use one another as a resource. All right, if I was a person in the community, I'll jump on here. I'll jump on the Discord, live Discord, and start talking with members. Okay, get comfortable, guys. Get comfortable. We're on the same team. All right, so provide insights for one another. Maybe use the chat to interact back and forth. All right, and use each other as a resource. So Wednesday and Friday. Okay, those will be 2 days where the stream will be delayed. And when we do jump on, we'll probably go into close. Okay, it just really depends. All right, so Wednesday and Friday. Mark that on your calendars. So at first, your liquidity grab was nice. That was nice. So look how quickly it took place. So it just impulsively pumped into it and then dumped. The question is, did they grab enough liquidity? Do we have enough liquidity that we grabbed there to dump it all the way back to the downside within second shift? In order for that to happen, right, which anything is possible, price is going to have to bounce off of this and grab it and probably get to that 20. If it can't bounce off and get to that 20, more than likely we'll just chop around in this territory between that 589.25. When I say the 20, I'm talking about the VIX. We'll probably just chop around this territory. All right. Yeah, walking the dog. We'll tune in back later. Green day so far. Thanks, George, and Discord friends. Absolutely, guys. So it's going to come down to you guys on Wednesday and Friday. All right? Wednesday and Friday. To really see what kind of community we are, that's going to depend. If I'm not in the picture, how we're going to navigate. All right? So I want everyone to be able to fish, and I want everyone to be able to collaborate together. Okay? All right? So very, very important. And I'm going to be keeping an eye on the chat, seeing how everything goes. I won't be taking any trades. Right? I try to avoid taking trades on my phone. Right? I have it to the point where if I only take trades if I'm on my desk. Before, I'll be taking trades all over the place. I'll be on my phone. I'll open up a tablet. Before I know it, I'm saying, hey, let me take one contract. And 10 minutes later, I'm in a full position. Right? And now I'm on a tablet, had no plan to trade, started with Justify to set up, and I was one contract turns to 5, turns to 10, turns to 15, and things start getting intense. Right? So I'll interested to see how you guys navigate. Right? I'll count on your insights. I'll have an eye on the markets as well. But Wednesday and Friday. Wednesday and Friday. So we're back at that pre-market low 50% retrace. There's a low probability bounce off that could potentially occur. Right? If you want to play the VWAP bounce, again, try to have all your bounces and moves measured to the next key level. So if you're playing the monthly open bounce, use that 50% retrace as your line in the sand. If you're playing this zone bounce, use that VWAP and that monthly open as your measured move. Okay? If you're playing the breakdown, the inverse. Only issue is now we're these two zones we highlighted in the pre-market. Right. Anytime we're jammed between these two zones, more than likely we're right under that 590 and having a hard time. So typically when you see if you guys are familiar with where's my broadening formations? Right, I know JB likes to draw his. I see you use a lot of broadening formations, JB, on your analysis. Right, this is what broadening formations look like. So broadening formations are ways where you gauge price exhaustion. So our price tends to reach exhaustion, right? So we can clearly see, and broadening formations, when you open up a 3 candle, when you open up a candle that takes out the highs, takes out the lows, that's basically the range of which way price is moving. So anytime price gets into these extremes, that's when it tends to reverse. So extremes reverse, extremes reverse, extremes reverse, extremes reverse, and now you go from one end of the extreme to the next end of the extreme. Okay? But the only thing is you don't know how long it takes to get there. All right? So broadening formation is another technical way price likes to move outside of trends. So, and the thing with broadening formations, they occur all over the place. Okay, well, that's something I want to bring to your attention if you're not familiar with broadening formations. So make sure to like the video on YouTube, guys. Looking for our next setup. All right, a lot of chop in this territory. You can clearly see if you zoom out, when in doubt, zoom out. This territory here. For the past, I would say 2.5, 3 trading days. Okay, look at that. Look at the mess. All right, look at this mess. And keep in mind, we're inside on what? We're inside on the week. So for us to pick a direction on the week, we need to get below 583.25. Right? And where's my weekly upside breaker? Or that 593.20. All the way there. So anything within that, we are inside on the week. So nice little bounce off that PMH and 50% weekly. Right there. Book the profits on calls, holding runner. Great job, Vincat. Right, so nice. You can see we came into the zone. We actually highlighted it off the open. If you've been watching the whole time, we highlighted it off the open. So we need the VIX to create some separation away from this double bottom formation. Either pump, either dump. Either pump or dump. So second shift, we took out first shift highs, and now we're just bouncing between these two zones. Bumper to bumper traffic. Let's take a look at what our neighbors are doing. Qs, what are the Qs doing? What are the Qs doing? So IWM is below that 200. Took out the previous day, that daily downside breaker. DIA bounced off that 200. SPY bounced off that 200. Qs are the furthest away from all the indexes. The Qs are the furthest away from that hourly 200. VIX, we know what's going on there. Dollar, gold. I think gold is making all-time highs again, if I'm not mistaken. No, not yet. But it looks like gold is breaking out. Looks like gold is breaking out. Breakout on gold. Okay, breakout on gold. Look at that. Textbook. Right? Resistance, 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 resistance. Break. Continues to push higher. Now again, gold. Let's see if we can stay above that 33.65, 66. And then the next measure moves into 34 and potentially push. So usually we move inversely to gold. All right. So gold, breakout on gold. Gold is seeing a ton of strength. U.S. oil above that 200. Bitcoin is at 104. So Bitcoin fell above 105,000 after making all-time highs last week. Let's see individual names. Apple below the 200. Meta bouncing. Meta looking to push into Thursday's highs. Google is sitting right at that 200. If you like to trade double bottoms, Google double bottom off that 200. Ticker symbol GOOG. All right. The difference between GOOG and GOOGL is just A class and B class shares. That's it. All right. So we have support right there. Google bounced off that 200. We have that double bottom forming. Let's see if Google breaks out of that inside candle and starts heading towards those EMAs. Maybe that's 171.88. So pay close attention to Google. If Google can stay above 170 psychological level, potential bounce on Google incoming, right off of that support. What's next? NVIDIA's above that 50. So a lot of these names are inside, guys. A lot of things are inside. Amazon, Microsoft, Tesla fell below 200. Netflix looking to push into last week's highs, Wednesday's highs, but is inside. Lilly right at that 200. Walmart did see a push above last week's highs, and that was actually the pick of the week. Pick of June, Walmart. So if you haven't seen the top 5 stocks for June, go check that out on the video. Taking a 30-minute break. Check back soon. No, yep, absolutely Slayer. So the nicest move in second shift was if you were quick on the trigger, that liquidity grab, right? But you had to take it in the face of first shift session high grab. You had to take it in the face of that strong candle, right? And the next best opportunity is bounce off of these 2 key zones, okay? Right there. We talk about that as well. All right, but you can see a significant slowdown in price. You see how smooth price was moving, and now it's starting to slow down. So as we continue to trade in these summer months, guys, those large gains that take place fairly quickly, they're going to be few and far in between. So you're going to have to rely on those double digit, single digit take profits to really make up a good chunk of your profit. Okay, they're consistently taking profits on the low double digit, high single digit territory over and over and over again, and once in a while catching these large moves, right? Because June, July, August, we tend to see some slowdown. Okay, volume slowdown. How are we doing on YouTube? Make sure to like the video, guys. Just waiting here for next setup. Waiting for our next setup. So you guys got off to a good start. So 1245, Goldsby. If we can come back into this territory, I'll probably take a bounce off of that. I'm going to reduce my size. Right? Price action combo. We're not creating any separation away on the VIX from session lows. No separation. Small put back to the downside, rejection out that 589.25. Been caught. Look at that slowdown. Let's see how much volume we had in first shift. Not that one. Okay, wow, 2.87 million. That's a lot of volume. right? Usually average between 1 to 1.5. Right, we're at 2.87, a lot of volume, and we saw a bit of everything. We saw a pump, we saw a dump, then we saw a pump. So 3 directional swings. Right, and it's a bummer because you get used to this pace. I talked about it last month. The market gives you a pace, and as soon as you adjust to the pace, they change the pace. So if you're used to this pace, if you're coming in thinking you're going to get these kind of gains here, right, they completely slow down. They're going like 70 miles an hour, right, to driving in a school zone. Okay, you're going to get ticketed. You have to know what kind of area you're in. Book profit and puts. So our ATR is at 98 cents, fell below $1. That's still really good. Still really good. What are we looking for, guys? Everyone on Discord, what are we looking for? What are we looking for? This kind of price action will put you to sleep. Make sure to like the video on YouTube. Let's get 30 likes. 30 likes. If you have any questions, drop your questions. So during first shift, took 4 trade ideas, 3 trades. The ideas worked out. Just got stopped out here. Double digit stop. Double digit gain, majority. But stopped out on all the runners. Right. So this one worked in my favor temporarily. This one worked in my favor as well. And this one stopped out the first time. Gave it the second attempt. And got back some of that initial stop out. Right. Again, not catching any of these massive moves. Right. So this was a nice reclaim. So we're not creating separation away. Look at the VIX. VIX is still stagnant, and it's still stuck at session lows. That double bottom we talked about. Okay, let's see if I can make it a little brighter. So it came into first shift highs. Grab those. Right, if you had to go triple top, your risk would be 590. Break a close above 590 would be your risk. You could use first shift highs. This is basically what you're assuming here is resistance is going to resist. Okay, the same thing is going to take place. If you're doing the opposite, you're going to need a close above 590. Okay, if you're going to be risky, you're going to take a break into 590. You're going to try to see if you can get an early entry. And maybe in this territory, if you see some strength, accommodated with some action on the VIX. All right, that's the approach. So the next move is going to be related to what takes place up here. Either go triple top or go resistance, turn support, break and hold, eventually retest, continue push. Right, but our relationship with the 590 is very, very toxic. How far does that stem back? I'm going to throw an alert here. But look, say if you took that bounce off of these 2 levels, look how long it took to play out. Okay. That's why sometimes hindsight on FOMO is almost like a confirmation bias. When we look at FOMO, we're not considering would we sit through that long of a period and sit through that kind of action, right? So would you sit in this position you would have sat in that position off that bounce for 22 minutes, right? If you're not used to sitting in a position in a scalp for 22 minutes, then your answer is no, right? Very rarely do I sit in my position for 22 minutes. Okay, we're starting to break down here on the VIX. If we continue to break down, that's going to support a break. All right. Be very, very cautious. Measured move would be like this. Okay. If we break above that 590, we can get an accelerated push. This easily could be a trap too. So if the VIX can break down, let's try to pursue that 1857. That can be great. That's what we want. Okay, so it's either we go resistance or we get that break of resistance. That would be the risk. So break above first shift highs, hold above that, push into 590, continue dump on VIX. Risk is TOG 589.25. All right, so that's about 50-cent risk. Okay, that's the next approach. If you're doing the opposite, play the triple top, triple top rejection. From here, what is the probability of an uptrend? So we are from shift to shift, we're higher than we were when we closed first shift, right? But from a medium time frame standpoint, we are kind of chopping side to side, but it doesn't mean there's not going to be any opportunity on the 1 minute time frame. So what I'm betting on is this breakout rather than the breakdown. I would say 60-40. Okay, 60-40. Or 65-35. All right. The thing here, I'm just trying to catch the next big move. I'm trying to catch the next big reaction. On the hourly, we're inside. After bouncing off that 200, after reclaiming those EMAs. Do we have enough fuel to go 3-2 continuation and push into these highs? So the hourly, we're inside. If we break above this hourly, we'll be directional as well. This hourly high is associated with these highs up here, right? So we can go 3-2 continuation if we break above those highs. So hourly, despite the action that we saw, this hourly candle is very, very strong. Okay, this hourly candle is very, very strong. Look at the 5. The 5 we went buy block as well. You can take that bounce as well. That bounce right here into the break off that 589.25. Look at that. You guys see that? What was that? Did you guys see that? And you get a random candle like this. VIX not doing anything, nothing happening. And you get a random dump candle. If you saw the time and sale on level 2, you would have saw that. Once in a while we get these candles. Right? Just algo wipeout. Just wiping people out. Can you open Bitcoin frame or talk about Bitcoin? Yeah, Bitcoin 105. So I don't scalp Bitcoin, but Bitcoin, just pay attention to the 105. 105,000. Pay attention to the 105,000. See if there's any opportunities off of that. If we break below the 105,000, see if there's room all the way to 100,000 flat. So just use those psychological levels. Okay, that's the approach. Just use the psychological levels. In call, exit from call with a loss. That was a nasty candle. Been caught. That thing came out of nowhere. And sometimes you get caught up in those, guys. Sometimes you get caught up in those. There's nothing you can really do. It just comes with the game. Okay, looks like we're starting to bounce. Again, if we're going to gravitate towards just 20, if we're going to bounce, we need separation away from it. That we can potentially see a continued breakdown. So second shift has been ugly. Second shift, complete contraction. Outside of the fact that we took our first shift highs, a complete contraction. Okay, make sure to like the video on YouTube. Make sure to subscribe. All right, let's get to 1,700 subs. 1,700 subs is the goal today. And look at that again, guys. Pay close attention to the time and sale, left-hand side. We're seeing some large iceberg orders coming in. Back to back. Manipulation. Please be very careful. All right. Look at these two candles here. The one candle that came in at 11:03 and the candle that came in at 11:06. So this candle right here is a point, a full point. So we made a 5-minute move in 1 minute, and then we had another move there. A 5-minute move in 1 minute. Take that off. So let me know in the chat. Put in the chat. Do you think we're going to reject off of this level? All right. Are we going to reject? Are you bearish or bullish? Does resistance resist, or does resistance turn to support? That's the question. All right. Does this resistance hold, or does this resistance fold and turn to support? Clearly, that's the next idea, right? Unless you come back into these key levels here, all the way down here, there's nothing in between you want to get involved in. Risk reward is not worth it. Not the best conditions, okay? That's the question. How are we doing on Google Meets? Anyone else take any other trades? Any trades in second shift? If you did, let us know. Maybe if you took that bounce weekly 50% retrace pre-market high, that's the only setup I can think of. Outside of that, it's been ugly. Outside of that, it's been treacherous. It's been ugly. On the 5, we went 3 up then 3 down. On the hourly, we're still inside. We're above both VWAPs, VWAP 1 and VWAP 2. We're green on the month. For the month of May, we're green up until this point. No trades today, no clean retest on the main setups. We'll finish off the second session and see if anything presents itself. If not, we'll be back Wednesday, working tomorrow during first shift and second session. Great job, Ryan. So no setups, no trades. Okay, that's the primary thing. You can only engage when you see what you can take advantage of. Yeah, second shift has been ugly. The encouraging thing is second shift, if you consider second shift accumulation, right? More than likely, going into third shift, we're going to break that accumulation. We're starting to put together a little bounce off this double bottom on the VIX. Okay, if we can continue to build some momentum off of that, continue to climb, potential breakdown incoming. Okay, potential breakdown incoming. We kind of slant this over. It's not even clean enough. It's not even clean enough to really use. We're basically stuck between that BOG and that TOG from this morning. The back in the jaws of the gap. So we fill the gap, we slice right through it, we get back into it, we get back to the downside, get back to the upside, get back to the downside. Great plan, Ryan. Took a small trade at PMH. Nice, you took that bounce. Great job, Daniel. Are you still in it? Or you're all out? What indicator do you use on TradingView for TOG, BOG? I just mark it on my own. All right, so indicators will be, I'll be releasing more indicators, guys. More indicators will be coming out. So be on the lookout, okay? So eventually, everything will eventually be, don't want to say too much, but it will be made very simple or simpler. Sold. Were you able to squeeze something out of it, or did you get stopped out? Depending on your entry, maybe you didn't even see a lot of drawdown. But great job on taking that setup. Met your criteria. Okay, great job, Daniel. It's breaking above 590 for it's breaking above 590 for sure. Today's my best bet. Think we would close at or around 589.50, but I'm out. I took my small profit and dipped. Absolutely. Always take your profit and dip. All right. I'm new to this, not true to this. I'm new to this, not true to this. I like that. Yeah, again, guys, make sure to join the Discord. All right. So a lot of our members were able to execute these setups here, take that breakdown. Okay. They find their own ideas. They do it. They take some of the ideas. Some of them don't take the ideas, but they're all somehow, some way, they're benefiting from the commentary. Okay. So if you want that real-time commentary, make sure to put yourself in a position to access these resources. All right. So before we get the next trade idea, all right, go to the Discord, go to the community tab, Smart Action Trading, community tab. Once you go to the community tab, you have three options. You can give the weekly pass a spin. You get access to live trading, right? But you don't get access to the rest of the stuff. You can give the technical only bundle. You get access to my charts and more and indicators, or you can just jump in to this. This is where all the members are in. $49.99 a month. So that's less than $2, right? $2 a month. You get access to cutting edge resources to put yourself in the position to be consistently profitable. Okay, we're coming into that level we talked about. 590 is primed. Okay, let's see if we get that continued push. Right. If you're already up, don't take this. If I'm taking this trade, I'm using less size. Okay, so I'm not sizing up like I did in the morning. Right, nope, just keeping it small size on Mondays. Even smaller size than before. Okay, so very important to understand that. Let me throw an alert on that. $14% twice, 60% on the retest. Great job, guys. Again, the objective is, I know it's a new month. But our objective is to conquer the week. All right? If you just think about the month, if you think of being green on the month, is too large of a task to think of right now. All right? It's too overwhelming to think of right now. There's too many things that can potentially happen. So your best bet is to put yourself in the position to be green on the week. That's it. That's what we fight for every day. Okay? Every day we're fighting to close out the green week. And if we can do that more times than we don't, the month will be influenced and the month will be green. All right? So it's a strategic approach. And we're segmenting it into smaller pieces. Right? It's a large goal. We break it into smaller goals and achieve those small goals. That's the approach. That's the approach. So make sure to like the video on YouTube. Can't wait till the action ends for second shift. Second shift's action has been ugly. Okay. Ugly action. We still have the key levels of trade, but the question is now the measure is the risk worth the reward? Is the risk worth the reward? In this kind of environment, no amount of risk is worth the reward. All right, you can clearly see the price action slow down. You can clearly see we have a lot of traffic in this territory. You can clearly see we don't have a runway. LYDB in calls. To like the video on shorts, double tap the screen. Double tap the screen. So let's put it this way. For your next setup to come, VIX needs to create separation off of these lows. We need to create separation off of this BOGTOG. So those two things closely align. So second shift is coming to an end. If you took any trades in second shift, make a note of that. All right, make a note of that. How did it play out? How many trades did you take? In my case, I took no trades. No trades in second shift. All right, no trades in second shift. Most of my work was done here. So since I took no trades there, third shift, I'll assess to see what opportunities present themselves. Okay, we'll see what opportunities present themselves going into third shift. Not sure if this is the chat to ask. Absolutely, Pumbaa. This is the main chat. But do any people new to trading want to collab on building your knowledge base with me? I'm new and looking for a good foothold on building a foundation. So when you say new, let's start with. Do you have? I'm assuming you have a trading account, Pumbaa. So you'll definitely benefit from the boot camp. The first thing you're going to do if you're brand new, if I were brand new, right, something that would have been useful for me is understanding having realistic expectations. Having realistic expectations is very, very important. And at the same time, not letting those realistic expectations kind of ruin the lure of trading, but just having that, the reality of trading being at the forefront. Right, so understanding that there's a lot of dangers that do come with day trading. You have to identify what kind of style fits your personality. Are you a person who has a high risk tolerance, low risk tolerance? Are you a person who gets anxious when they're in a position and needs to hold for a longer period of time? Right, so there's a lot of things you need to ask yourself before taking any trades. But the first thing is understanding the fundamentals. As far as what are options, what are the Greeks, what's the price action, what are moving averages, what are candlesticks. Those fundamentals need to be covered, right? As far as the charts and the technicals, and what options are. Once you cover those, is more of trying to see what style suits your personality, right? Some people don't like scalping, right? Some people don't like scalping. Some people they can't sit in a position for 1 minute, 1 to 3 minutes. Some people they like to let the trade play out, so they won't be good at scalping. Some people, I like scalping, so I don't like to let the trade play out too long, right? Because of what I'm looking for. I'm looking for those double-digit gains. If I can get them quickly, the rationale I provide to myself is, why am I going to wait if I can get it right now? Why do I have to wait for it to play out when I can get it right now? And I can do it multiple times. Okay, so that's what I would start, Pumbaa T. But great question. So start off with the foundations. The foundations meaning, what are options? I have that video on YouTube, and you have access to the full length of the video in the weekly lessons. What are options? You need to know what they are. Right? You need to know what options are, how they work. Not just know, but really solidify that information. Be able to speak the language. Okay, so immerse yourself in the language of options, in the language of trading. Once you do that, the technicals. Technical analysis. What's a trend? What is consolidation? So a trend is higher highs, lower highs. So that means the market is going in an upward direction. And there's two types of trends: downtrend, lower lows, lower highs. That means the market is going in a downward direction. And there's another state, consolidation. So just think of there's three possible things the market can be doing. It can either be doing side-to-side movement, up movement, down movement. When you narrow it to those three things, now you need to have a mechanism or a system in place, right? Through your learning, through seeing what fits your personality, to take advantage of those three different conditions. Okay, now when you find that, you just have to refine. Take the trades, see how much size you need to use, get comfortable with taking real positions, get comfortable. So it's depending on where you are, the first 3 to 6 months, it's going to be dedicated to learning, right? So that's the reality of it. But once you get through that 3 to 6 months of learning, right? So I highly advise you putting a lot of capital in your trading account, because more than likely that capital is you're gonna lose that capital. So I said this in the beginning. If I were to start trading today, and if I'm trading options, say I have a 25K account, right? I'm not trading with 25K, right? I'll take the 20K, put it to the side, put in a cash management account. They'll give you 4 or 5% now, right? And then use the 5K. Use that 5K and manage that 5K like it's 25K. And then if I can prove to myself, hey, you know what, if you blow the 5K, that's tuition, you're learning, right? It's almost like, I'm not encouraging you blowing it up, but it's almost like a rite of passage. Trust me, losing the 5K is much better than losing the entire 25 or the entirety of your account, right? Worst case scenario. So cut it in half, cut it in a quarter, use a small amount, practice with a small amount. And then when you've proven yourself, give yourself a promotion. So if I have a 25K account, I'll use that 5K. Okay, say if I'm doing good with that 5K and now I'm able to take that 5K, turn it into 7,500. All right, I'm building the confidence. I'll infuse another 2K into the account. I'll give myself a promotion. So maybe I can size up a little bit. Do you understand? So approach it that way. The thing with the trading is you're in charge. You're the employee and you're the boss. So it's like a business. So people who have businesses or who are entrepreneurial, they'll love trading because they can be the employee and the boss simultaneously. They can shift between those roles. They can be a project manager. They can be an employee. They can do all those different things, right? So that's my approach, Pumbaa. But trust me, you're in the right place, right? Let me know if you need anything, and you'll truly benefit from the boot camp. Okay, so the boot camp, sign up for that. That's going to come later this month. Okay, so just fundamentals first. Okay, cool. All right, fundamentals first, and see how everyone else is trading. See how everyone else is trading. See how I'm trading. Try to learn. Why am I taking that position? Why am I not taking that position? Why am I cutting here? Why am I taking profits there? Right? So just use it as a way to immerse yourself. How long have you been trading Pumbaa? Let us know. Out of curiosity. 2 months. Okay, yeah. So you're relatively new. So right. So now is just getting the foundations, getting the fundamentals, building a good core. Building a good core, but you eventually you're going to be happy that you found trading. Trust me. It's a long journey, but when you get there, it's going to be worth every bit of it. But great question. So yeah, if anyone else has advice for Pumbaa, if anyone else is a beginner trader, if anyone else is on the journey or well ahead, we're all on different parts of our journey. Just reach out to Pumbaa, drop in the chat. A couple of pieces of advice. If you were to start trading, what would you like someone to tell you in the beginning? One piece of advice. Yeah, put that on YouTube as well. One piece of advice you would tell your old self or your beginner version of yourself. Right? One piece of advice you would give yourself. So put that in the chat. As we watch this price action, as we watch second shift conclude. One piece of advice. We're pushing back into that 586.13, 586.18. Okay. Ugly action second shift. Ugly action second shift. Okay, tremendous drop off in the volume. Right. We got about less than half of the volume we saw in first shift. And look how tight the range is. Right, there's a complete contraction. All right, about $1.82 on the range. First shift, $4.88. So a complete change in the pace. So half the volume and essentially half of the range. So if you benefited from anything here, you're looking for the same thing here, you probably gave back everything you made here. If you're able to identify the condition, you probably didn't touch it here. Or if you do take any trades, you're not wanting the same, you're not having the same kind of expectation because the conditions changed. All right. So now we're approaching this key zone here. It looks like we're coming back to test VWAP 2 and VWAP 1, along with the 50% retrace on the weekly and that 588.13, that pre-market high. If you want to take that bounce, risk monthly open, that's about a 48-cent risk. That kind of encompasses both VWAP 1 and VWAP 2 retest. If you want to take the breakdown, opposite. We got some advice. Trip red, don't be greedy. That's some great advice. Stick to the stops. It's easy to hold loser trades. It's hard to let them go. I stick to 10%. Absolutely. That's the biggest one too. Great. That's a good piece of advice, Mason. Limit your risk to 1 to 2% of your trading capital per trade. Risking too much in one trade is a quick way to blow your account. Don't compare yourself with other traders. Limit the number of trades you take per day. Cut your losses short and take profits when green. Right, so we got an awesome community, guys. Look at all the people sharing some insights. Okay, so welcome Pumbaa. One piece of advice you can see George is using TradingView. Has a minute and a 5 minute. Get comfortable with TradingView. Yep, exactly. Using the drawing tool on it. They have a free version, very inexpensive version too. Yep, exactly. So just getting yourself acclimated with the tools, with the term, just the fundamentals, right? It's like when you get a job, right? How long they give you about a 90-day period for you to get trained and for you to get acclimated. You're not going to walk on a job second week. It depends on what kind of job. At least in corporate, right? You're not going to walk on a job the first day. They're going to give you 5 projects, right? First, they want you to get used to, right, what kind of platforms they use, what kind of suites they use. If it's support related, we use this kind of ticketing system. This is how we operate. This is what we do. Do this. Just getting used to the stuff, right? So thank you everyone for your insights. I'm new as well. My usual approach is not holding long term, but I'm entering the game with the mentality that I'm ready to lose. Absolutely. Ready to lose. The loss is inevitable. I like that. Ready to lose. Losing is inevitable. But if you ask me, I boil it down to the 3 pillars. We covered the 3 pillars. Maybe I'll make a detailed video about the 3 pillars, right? Psychology, strategy, and trade management. Psychology, strategy, trade management, and all those 3 things encompass different things within them. When you have those 3 things, I forgot which episode I was talking about it. But those 3 things are very, very critical, and they all have to be working together in unison. So great piece of advice, everyone. Okay, we're in 3rd shift, guys. 3rd shift. So 2nd shift didn't take any trades. So essentially break even. 1st shift agreed, 2nd shift no trades. I mean, we did highlight that opportunity there. Took a while to play out. If you did take that, maybe you were able to squeeze something out of it. Outside of that, I was looking for that break above that 590. If we can break above 1st shift highs. Didn't really come to fruition. So going to 3rd shift, everything is going to be associated with this level here. Okay, everything is going to be associated with this level here. This key zone. So it's either we break down, or we break out. Okay, the breakdown, break out, bounce, rejection. All right, the way the VIX is starting to shape up, if the VIX continues to tick higher, I want it to start picking up its pace. If we fail to hold this level, fail to hold the VWAP, right, this liquidity grab that we saw, right, does that have enough fuel to dump us all the way at least back into that 587.75? Right. But for now, I can't capitalize off that little bounce opportunity. Even though it breaks down, you still can take advantage of a bounce if you're scalping. Okay. So the breakdown will be invalidated. The reason why I prefer the bounce is because we're coming to this zone. We had this reaction previously. We're above both VWAPs. VWAP 2 was essentially right where VWAP 1 is. Let me take a look at the 589 calls. There's a high risk bounce. Okay, using less size. Okay, I'm in the calls. See if I get a little bounce there. Okay, I want that to be continued. Continued bounce. If it breaks down, then more than likely we're going to slide to the downside, down 2%. See if buyers can step in here. Right, don't like how the VIX is starting to tick higher. So if you're playing the breakdown, eye that level. See if we get a little last minute bounce here. Okay, it's starting to push. I want it to be sustained. Let's see if it's sustained. Down 2. So the VIX is working against me here. All right, see if I can at least get that bounce into 588.56. 588.56. Okay, beautiful, 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 beautiful. Up 11. I'm gonna take a majority off right there. At 11. Down to a runner. Up 10. Okay. Locked in at 11. Nice little bounce there. I'm gonna close the rest of it there. Close that runner at 7. So beautiful little bounce. Anyone catch that? Right. Nice double-digit bounce right there. All right. Well ahead of time. Waited for it. And of course, if you're new, by the time I let go of the trade, that's typically when it starts running. Right. So we're able to squeeze 11% out of it. But again, that 588.56, it's going to be hard to get past that level. The fact that the VIX continues to push higher, I might want to seek into that 588.56 and then collapse. If it gets above 588.56, it can take off. But beautiful bounce, double-digit gain right there. Who took that bounce? Right, nice little scalp. You can't beat scalping. 2 minutes, 2 minutes of work, 11%. Right. If the VIX was not heading in the opposite direction, if the VIX was breaking down, I'll hold this thing. Right. 2 key levels converge, they create a key zone. Nice little bounce right there. That's the when ATR is high, right? You get those nice little pops. Anyone caught that? $11.36. Great job, Daniel. Right, short-lived. Short-lived. High risk bounce. We talked about it ahead of time. Opportunity presents itself, comes into our level. We just have to allocate risk, manage risk. If it breaks down, I get stopped out. And I'm using that breakdown below VWAP as my primary line in the sand. Okay, great job, Daniel. If I can get 11% in two minutes, a minute and some change, there's no reason for me to wait. Because I can always reassess and re-engage. For some reason, you know, when traders are in a position, they think, or we come to this conclusion that this is the only position we can take. Right? You can always lock in your profit, reassess, re-engage. Because if a bounce turns into a potential reversal and back to the upside, it's going to present another entry opportunity. Okay? So great job if you took advantage of that. If we hold above that 588.56, if you have runners, it can potentially push into 588.25. All right? Let's see if you get a close above 588.56. You have runners or you closed out, Daniel? Keeping the motion check is hard, but it's the key to trading mindset, absolutely. How are we looking on the news? Any tickers, any tweets? So right there, guys, that little bounce right there, that pays for your, depending on what size you use, that pays for your up to your yearly membership. All right. Inputs, book profits, great job, not Carlos. Great job, Vinkat. If we break down, I can potentially flip. Make sure to like the video, guys. Make sure to like. Make sure to like the video. On YouTube. So our objective is green month. We're going to do that by having green weeks. If you can get 3 green weeks or even 2 green weeks, you can have a green month. As long as you're managing risk on those red weeks. Right. Okay. Now we're starting to get the continued strength. Right. I already took this, extracted the profits, closed out. Great job, Daniel. And I believe you joined last week, if I'm not mistaken, Daniel. All right, so good job, Daniel. We're keeping what time frame? What it calls what is time frame on second shift? Time 1 minute time frame. KYB, we're keeping the Egyptian. You're from Egypt, KYB. You're joining us from Egypt. What time is it in Egypt? Are you in Cairo? Make sure to like the video on YouTube, guys. We got 25 likes. Let's get 30 likes. This thing is turning into a nice move here, right? Could have held a little longer, but I just wanted to secure the profits. But look, trade idea came in, continues to accelerate. Last Thursday. Green on Thursday, Friday, and hopefully today. Great job. You should be done it should be done for today, Daniel. You mind if I call you DC? Right, DC. So keep it short. DC, yeah, okay. So nice little push there. Right, we identified this opportunity primarily here, right here. Didn't take the opportunity, wanted this because I was a little bit concerned about that liquidity grab, seeing if they see if we get that breakdown here, right? Opportunity was there. That was the best opportunity in second shift. They don't really like the action in second shift. But where did this level come from, guys? This level came from this morning. At some point in time, I was long here. If you go back to 945, 940 territory, that was the trade idea. I was able to squeeze 10% out of that. I then got stopped out on the runner. Okay? Yeah, DC's good. Yep, no problem. And of course, when I'm no longer there, it takes off. That's the running joke. As soon as I cut it, it takes off. So now we're above that 588.56. See if we want to seek that 589.25. Right. When I got those contracts, they were at 88 cents. They're currently at 117, 120. So about $30, $40, around $40, close to $40 per con. Kind of see this a little bit. All right. Could be a stretch, but nonetheless, it's still there. These previous highs. It kind of stems from pre-market high. Pre-market high and Friday's highs. If you see it. Okay, so. So let me take this off and let me grab this one and put it here. That's how it looks. I'll go with the smaller one. Just encapsulate first shift, second shift. In a put, exit from puts, book profit. Great job, Vinkat. Make sure to like the video, guys, on YouTube. Let's get 30 likes. 30 likes, 40 likes. If you're a first-time viewer, let us know where you're joining from. This is episode 59, guys. Episode 59. If VIX continues to break down here, we can potentially get above that 589.25. Seems like the VIX is lagging the index. Seems like the VIX is lagging SPY. Nice retest right there. See if we get that retest, continue push. So guess the trade idea came in down here. The entry trade idea came in down here. So we get that nice breakout. Exit from puts with loss. Let's see if we get any news. No news. Look at that, guys. Where is this coming from? Key zone. Okay, that's why if you need to go read, and everyone in the Discord, I have a book that talks about the way I draw these key levels. If you notice, these key levels are always on the chart. I have a system in which I approach key levels. Every level to me is not a key level. I only call certain levels key levels. Okay? But the thing with the way I approach it, once the bell rings, I don't draw any key levels. That's a unique thing with my strategy. Once the bell rings, I do not draw any key levels. I use the key levels that are already there, that price had previously had a reaction off of, to gauge my trade ideas. The only thing I'm doing when the bell rings is assessing the conditions, assessing the trend, assessing which way we can possibly go, assessing if we can get breaks, retests, and I'll identify some levels, but those are not key levels. I'll assess accumulation breaks, bull flag, bear flag patterns, upward accumulation, downward accumulation, whatever you want to call it, right? Patterns, right? Structure. I'll assess those things, but I'm not drawing any levels. A lot of traders, what happens is they're drawing as price is taking place. By the time you identify it, it's too late. In most cases. Okay? So we're having some hard time at that 589.39. Why? That is the previous day close. That's Friday's close. If the VIX collapses here, the door is open for us to re-engage with the potential at 590. Okay. The first time we got into first shift highs, we grabbed first shift's liquidity. Now we have room to run into second shift highs. All the way at that 599.94, shy of that 590. 589.94, shy of that 590. Okay, we're above that TOG. So again, we keep crisscrossing, getting above that gap, get below that gap. The only early entry I could possibly think of, if we have enough momentum off of these levels, is if we can get above this zone here. If we get above the zone TOG previous day close, into these highs, potentially, break and hold above these levels. And the way I'd approach it is this is predicated on the VIX breakdown. Okay, if we get above it, that's about a 13-cent risk. So very tight risk just to position yourself into the break. So you're already in profit. That can line up with the moving average. That would be great. So break above 589.40. Hold above 589.40. In pursuit of that 590. Or that 590 territory. Break and hold above 589.40. Or retest bounce off that 589.40. I like how the VIX is dumping here. Looking at the 589. See if we can get above 589.40. Right? The intent is to be in position to take advantage of the action up there. Look at that. You see? See if you can pull back slightly. If you took that break, you're already in profit. Manage accordingly. Look at that, guys. To a T. See if you can pull back slightly. Pull back a little bit more. All right, if you took that break, already in profit. Right, now you have, look at that. Beautiful. All right. So I have no horse in the race, just providing the idea. But look at that. All right. So if you're trying to catch that 599 break, you don't wait until you get to 590. That's too late. Okay, you're gonna have to find a way or identify a zone for you to take advantage of price there and then ride it into that level. Because if you're here, if you took that, you're up maybe 30, 40%. So now you can sit through the interaction we have with that 590 because you're using profits to engage that. Okay? Again, same kind of thing here. That was beautiful. That played out to a T. Now let's see if the same thing happens. We grab first shift's highs, we dumped. Grab second shift's highs, and we're dumping. We got as high as that 590, 589.97. I'm still here for the retest. That's a key zone. Let's even come back a little lower. Because if we break above 590, guys, we have a nice runway. See if we can come a little bit lower. See if the contracts can get devalued slightly. Right, miss that entry on that break and hold. Or even that break, clean break. Line it up beautifully with the VIX. If I don't get price to come back into this territory, break, hold, retest off 590. Previous resistance turn support. We talked about it here. So either way, I'm looking to take advantage of that. Anyone catch that by any chance? On YouTube, on Discord, Google Meets? Hopefully someone caught that. Hopefully someone caught that there. But look, this is where you start. This is where I start getting FOMO. At some point in time, I was in it here. Okay, we continue to accelerate here, guys. Let's see if we can get above 590. $590. Who says we break 590 and hold and continue to accelerate? All right. So the idea, I have serious FOMO. That's where we're in here, right? Identified that. Just because you're not taking any trades, still do the analysis, guys. Still do the analysis. Build your muscle memory. All right, build your muscle memory. It's very beneficial. It's 10 times better than back testing. Right. Back testing is good, but a lot of times when we back test, we cherry pick the times where the setup worked in our favor. If you're back testing, if you're a back tester, I'll give you a tip. Look for your setup. Don't look for the times it worked. Look for the times it didn't work. Do the opposite. All right, look for the opposite. Poke holes in your system. So go back testing if you like back testing. Identify your strategy and look at the instances it didn't work. Once you find all the instances that it didn't work, now when you're in the position, you know what to look for if the setup is going to fail. There's not an infinite ways the setup is going to fail. There's a handful of ways something can fail. Okay, so you have to be aware of that. So when you're back testing, don't go use confirmation bias and try to make yourself feel right. It doesn't do anything because it doesn't count. Right? So it's better for you to go poke holes in your system, tear your strategy apart, shred it. I caught some of that. I think with the runner, beautiful job, 12%. So great job, thesis. And if you've been going to battle with the community since March, since April, since May, I can see the tremendous improvements on how you guys are navigating, right? And you can see the tremendous improvements you're making. The confidence, the setups, the approach, the professionalism, all those things, guys. Okay, so great job to the ones who've been here since April. for the ones who've been here since May, for the few who've been here since March. Okay, we're just getting started. The ones who joined in May, right? You'll start to see those improvements as well. All right, so you'll start to see the improvements. And those improvements are for you to enjoy. You put in the work, you put in the time. So you get rewarded. You make the sacrifice, you get rewarded. So it's for you to enjoy. 590, we're having a hard time with that 590. So if someone is trying to play that 590 break, okay, smart money already got in here. Okay? They already got in there. They're just using this as, if there's enough fuel above it, I'll consider it. But I like this runway, guys. I like this runway we have. In order for us to pursue this runway, we need the VIX to completely break down. Day one is absolutely thesis. Right? So again, guys, you don't want to miss the opportunity, right, to really lock in to yourself. All right? Put yourself on the path. The time is going to pass. We're already 6 months in 2025. So 99% of people's resolution is out the window. Right. 99% of people's resolution is nowhere to be found. All right. So 6 months from now, 2025 will be in the books. And where do you want to be 6 months from now? Okay, so very, very important that you ask yourself those questions. Where are you in relation to where you want to be? So 590, if you're taking that 590 projection, right? Great job. I'm going to take this bounce here. Again, using less size, it's using 5 cons. So the approach is take 5, majority take 4 off, and then use 1 as a runner. Gonna look for some call 600 DTE shopping. That's not 600 DTE, 400 DTE. I misread that. So I'm going to use this previous day close at TOG as my key zone, right? And we have that 20 trailing in, so we can use that 20 as well. I can kind of justify a retest of this multi-day downward compression break. So if it's even coming a little lower. I'm up 12% on my account today. Great job, Jack. Look at that. Awesome, awesome, awesome job. Everyone is absolutely crushing it to kick off June. Right? If you're not, guys, these are real people. Okay? So these are real people just like you. So when you see someone doing well, it should be like, hey, you know what? I can do it. It's possible. Okay? We're so used to people losing, gatekeeping, and members not seeing the results. These are real people who have real responsibilities, who have real lives, and are absolutely imposing their will, showing up every day and unlocking domination. So great job, Jack. You've been, for the past past 3 weeks, you've been crushing it. Great job. 12% on the account, guys, not 12% on the trade. Did you catch that bounce right here, Jack? 50% retrace pre-market high, or this last one? All right. So if you have any questions, ask Jack. Right. Share information, guys. Share information. Utilize the community. Ask each other questions. Share ideas. My strategy is out in the open. Okay. There's nothing I'm doing that special. All right, so we are a community, guys. Gonna look for some for you. I read that. Okay. Book profits on call. Great job. Make sure to like the video on YouTube. Make sure to subscribe. Again, smartactiontrading.com. Right. To give you some idea, focus on YouTube. Look. Oh, wrong tab. Focus on YouTube. Okay, let me bring this here. Here. Look. Look at the people. So 14% twice. 65% here. Absolutely killing it. We got the best community, guys. 12% here. Yeah, 12% on the account. Right? So everyday people achieving these results. Great job. So we usually run our program until 1 p.m. So make sure to like the video. Make sure to subscribe. Wednesday and Friday, there's going to be no stream. The stream is going to be delayed, so no pre-market prep. All right. So the pre-market prep is not going to be available, but I'm very confident everyone can navigate. Okay, everyone can navigate, and I'll join later on during the day. Not sure on the exact time, so probably around late second shift, maybe third shift. Okay, so that's the beautiful thing about these shifts. The way we have our day structured with the shifts is just plug and play. You pick a shift and you can just see what's going on, get a quick recap of the action, and just start taking trades. All right. Was dead this morning. Worked last night. I'll be active tomorrow. Yeah, you were. Yeah, take it easy, JB. You do a lot. You do a lot for the community. We appreciate all the technicals. All your charts are on point, and it's good for you to notice. Hey, you know what? I'm not 100%. I'm not 100%, so I'm going to do less. So look at this 590. 590 is like a brick wall. 590 is like a brick wall. High risk bounce here. High risk bounce here. Okay. You don't have to take it. I'm looking to take it if I get some sort of price action combination. All right. So let's see if we can come a little lower. I like how the 50 is there. Book profits. Great job, Vinkat. Keep in mind, if you're on YouTube, there's a delay. If you're on YouTube, there is a delay. 30-second delay. I might wick out here. See if we can get one more flush. I can wick out there, but I'm trying to get one more flush. So technically, there's an entry here. But I want it one more flush. Come a little lower. Now I'll see if we can wick back out. And if we can wick back out here, I'll take it. If we can start wicking. If it's a full body close, I won't take the trade. If we can wick, I'll be there. It's testing that 50. See if you can wick. No wick, no trade. I want that 50 to hold. See if I can take it there. Didn't get filled. Didn't get filled. So I can take it there. See how quickly that happened? Okay, got filled. Okay, got filled. Didn't get the best fill, but I like how quickly that thing wicked. Up 1%. 2, 4. See if you get that continued push. I like that reaction that we had off of that 50 and that level. Up 5. 4. If we did take this, manage accordingly. Right. Trade ideas here. Couldn't get filled. Beautiful, beautiful, beautiful. Up 7. I'm going to take it off right there. Okay. Fill that 9. Down to runner. So took off a majority, down to runner now. Took off a majority at 9. Down to runner. With this runner, I want price to stay above that TOG, guys. I want price to stay above that TOG. Okay. So if I got filled here, I probably would have been in nice double digits. But the fact that I had to get filled up here, right? After I couldn't get filled. But you see how that's the approach you want to have when you're playing a bounce, or when you're playing a bounce coming into a key level and there's aggressive selling. Okay, you want to see if you can get a wick back above it. We can get back above that 589.59, we'll be good to go. Runner's up 5%. Right, so with this runner, see if I get a large percentage gain, or see if I can get into that 590. I'll use this runner as a way to get into that 590. I already secured profits at 9. Okay. If we break back below 589.28, I'll close the runner. That's the approach. That's the approach. So basically that 50. If we close below that 50, I'll be out. When can we read more about your strategy? So if you go to, hold on. I might have to cut this runner here. The way you manage your runners, guys, manage your runners the same way you manage a position. The way you do one thing is the way you do everything. Okay? So we're here. I'm going to cut that runner slightly below break even. All right? Just using the 5 cons, took a majority off at 9, and then cut that runner here. Where can we... So now that we're coming back into it, we can potentially break down. So pay attention to it. If we break below that 50, we have room to drop. We have a little runway here. So this zone is going to be critical. This zone will set the tone. All right. So I already extracted 9. Stopped out on runner. It can continue to bounce. It can break down. Whatever happens, happens. Right. I already got what I was looking for. Where can I read more about your strategy? So if you go in the Discord, go to ebooks. Okay, so go to ebooks right there. The ebook is available on the website. Okay, the ebook on YouTube, the ebook is available on the website. Go to ebooks, you can purchase it there. Right, $21. If you're in the community, the ebook comes with the premium, $49 a month. The ebook automatically comes with it. If you're already in the community, you get access to the ebook. If you join from some time from before, you get access to it. So again, guys, that's the offer. So the ebook is critical. That ebook is critical. Anyone take that bounce by any chance? No worries. I was done at like 10:30, then just journaling and just been listening. I pretty much done for the day. 12% overtime will add up. Absolutely. Then I'm pretty done for the day. About the check. Y'all have a great day. Have a good day, Jack. Right. So I'm looking to wrap it up too. Took this here, took that there. Right. So the action today, guys, has been fairly, if you know what you're looking for, it's been fairly not too difficult to navigate. Again, you guys did an awesome job on catching this drop. I didn't even catch this drop. Took trades there. Right. Took 3 trade ideas, 4 trades, stopped out on 1, and last 2 trades here. That'll probably be the last 2 trades of the program. And that's a total of 1, 2, 3, 4, 5, 6. So out of 6 trades, 5 worked in my favor. Okay? So fairly straightforward day. So even without catching that big drop, still able to end the day nice green. All right? So have a great day, Jack. Great job. How are we looking on YouTube, guys? How are we doing on YouTube? So this level continues to hold. Are we surprised? There's a key zone. Okay, there's a key zone. This is a key zone. Let's get the likes up, guys. We got 28 likes. Let's get 30 likes. 30 plus likes. If the VIX breaks down here, we have fuel above 590. That's my area of interest, guys. We keep failing this 590, 590, 590. Eventually, if we break it, we can explode out of it. Okay? There's a couple of things we need for that to take place. Jamie Dimon says the U.S. deficit depth is a big deal on a Fox News interview. Dimon says bond market will have a tough time because of deficit. Okay, look at the headline here. So investing.com says stocks dip to start the month. VIX rises amid U.S.-China tension. Okay, that's at 11:41. Okay, for someone who's not involved in the technicals, I would argue this is actually fake news. Okay? This is not correct. Stocks dip to start the month. VIX rises amid U.S.-China trade tensions. Where is this? Where is SPY, guys? Where is the VIX? Right? For a layman, yes, this makes sense. But for a technician, that's incorrect. And that they just posted that 11:41. Okay, so according to the action, we're currently at the highest point, near the highest point of the day, and VIX is at the lowest point of the day. All right, so very important to understand that. Again, idea provided there. If you took advantage of it, make sure you manage accordingly, take profits where you need to. So take all these headlines with a grain of salt, guys. Okay, with a grain of salt. All right, look. So we have a news feed to keep track of all the tweets and everything in the community, right? Look, see, 11:41. 9K views. So now, 9K people, or say out of the 9K, 10% of them are trading. And they don't know what they're doing. That's 900 people. They read that headline and they go short. They would have got clobbered. Okay, so please don't trade based off of headlines. And understand not everyone is a technician. If you want to be a technician, right, you're going to have the upper hand on a lot of people. People are not willing to learn the science and the art of the technicals. So you're going to separate yourself away from the crowd, from the herd. A lot of people are good at the fundamentals. There's a few people that are decent at the technicals. But if you dedicate yourself to the technicals and become an expert technician, put in the time, study all the different ways, even understand different strategies, even if you don't trade them. So I had to go understand ICT. I have to go understand smart money concept. I have to go understand the strat. I have to go understand all the retail patterns. I have to go understand them, everything. And then you put together what you want to put together. You should be able to speak all the languages, right? So a lot of the people on behind these tweets and behind these news vendors, I'll call them news vendors. They sell news, right? They're not technicians. Okay, so we can almost see through it. All right, so very important to understand that you have the upper hand. I would argue we are moving with the market. We're paying attention to SPY on the 1 minute. So if anything, we're keeping up or ahead of the curve. Okay? We're paying attention to SPY on the 1 minute, minute by minute for from 9 o'clock to 1 p.m. So how many hours is that? So I would argue we have the edge. Okay, I would argue we have the edge. So we're starting to form a downward compression here. Maybe if we come back into it one more time, we get that bounce out of there to get that break out into that 590 potentially. So same kind of thing potentially transpiring between that 589.39 and that 589.25. We'll see how that plays out. Booked profits on runners. Great job, Vinkat. So again, guys, make sure to like the video. Make sure to subscribe. 2 trade ideas provided on YouTube, provided everywhere, right? And both, look at that. You can't miss a single episode, guys. You can't miss a single episode, a single minute of the show. Cam is a single episode. Okay, we're coming to that level. Let me know in the chat. Do we break down or do we hold? Bounce or break? Bounce or break? Yeah, those wicks down here, yeah. I agree, I retired Fido. But the grind is just the grind. The midday grind. So if you're just joining us, guys, first day of trading in June, had a SPY open up, SPY gaps down. After it gaps down, it fills a gap, dumps all the way into 585, reclaims a yearly open, pushes into the daily highs, and then now it's just been bouncing between that 588 and that 590. Right, we've been tight. We're trading in that tight range. So we got breakdown in the chat. So that's probably all the trade I'm going to do. Took 6 trades. 5 of the trades worked in my favor. All right, so a great way to kick off June. A lot of you are in profit to kick off the month, to kick off the week. So don't give it back. Okay, don't give it back. Now your objective is to walk away with what you made. Okay, don't turn it into a casino. All right? Don't turn it into a casino. I'm waiting for Powell. Powell is at 1:30. Is it 1:30? Retired final. Let me check. So Powell will be speaking at 1 p.m. So if I'm going to hang around for Powell, okay, let's add an incentive. Let's get 35. Okay, let's get 35 likes. I think you guys can do 40 likes in the next 40 minutes. 40 likes in the next 40 minutes. We have 31 likes. Let's get 40 likes. We'll extend this stream past 1 o'clock to see how the market reacts to Powell. All right? And I'll continue to identify the opportunities. If you're already green, please don't be lured into taking any more setups. Just stay green, stay clean. So 40 likes is the target, guys. How are we looking? If you guys want to hang out past Powell, if you guys are still trading on Discord, I'll stay on until maybe 1:15, 1:30. All right, and just cut off the YouTube stream. All right. So we can always stay a little longer in a private community. Just to see how the market reacts. So let me know. Vote with the likes. That will tell us what you guys want to do. All right, and let's see if we hit 1,700 subscribers. Okay, 1,700 guys. We're at 1,700. Thank you for subscribing. Let's get to 2K. 2K. So we started with 0, guys. All organic. All organic. Just showing up every day. Trading the markets. All right, so look at this zone. There's a reason why I highlighted this zone. Do I want to sit through all this grind? No. Do I want to keep putting on risk? No. Is it there? I can monitor it? Yes. We're inside on the hourly. Keep in mind, we're above that zone, that 588.80 and that 589.25. If you're trying to play that 590 break, that's on the table. All you need is a breakdown on the VIX. If the VIX breaks down, this thing is out of here. The best way to position yourself for that 590 break is to take a position here. We talked about it earlier. So by the time it gets into that 590, you're already in profit. If you want to play that 590, the best approach is try to gauge your risk. I mean, you can put your risk all the way down here. That's about 62 cents previous day close, right? Use the moving averages, and you have runway into that daily upside breaker. Do you have to hold the target? Do you have to see it through? Probably not. Just take profits where you need to, right? But maybe a break and hold above that 590 on the 5-minute time frame would be favorable, along with a breakdown on the VIX. That's what I'm looking for. If that occurs, I'll put on another trade. If you haven't already, go check out the video top 5 stocks to buy in June. That's available on the channel. And I had to repost the weekly stock update. So the weekly stock update, I pre-recorded it, I posted it, and OBS, my screen was frozen. I didn't realize it. So I went back, I stripped the audio, and then I just put some graphics that we typically go over. And that's back up. So you have to watch that weekly recap. If you want to get a feel for what happened in May, if you want to get a feel for what happened last week, I go over some critical charts in there as well, right, to give you a macro picture of where we are and where we're potentially heading. So make sure to go view that. Make sure to go watch the recaps. That recap is about 20 minutes. So 20 minutes of your time to get you caught up with everything you need, all right? So that's available. So again, 40 likes. We'll stay until 1 o'clock until Powell. We're at 33. I'll keep a close eye on the likes. Anyone looking to play that 590 break? Let me know in the chat. 590 break. Powell want to pin it to 592. Okay, yeah, we'll stay. We'll hang out, guys. We'll hang out. If anyone has a link, I'll look for the link to where I'm not 100% sure on what the context of what Powell is addressing. So if you have any links to the thing, to the speech, this is not the FOMC, so it's not the rate decision. But if you have any links, if you guys can find the link, just drop it in the chat in the Discord. I'll go open it up and we'll just watch it top right-hand corner. All right? So we're about to come to the conclusion of third shift, guys. Third shift took 2 trades. Both worked in my favor. Right, this one turned out to be a monster trade, provided the idea. This one was, both of them were at the end of it double-digit gains. This one worked out fairly quickly. All right. So that's my objective. The objective of June, I'm trying to stick to it. Quality over quantity. Right, so less is more. So let me know in the chat, guys. Let me know in the chat on YouTube, in Discord. Are you green? Are you red? Are you yellow? All right? And you should be done trading by now, guys. Don't try to trade more than 2 shifts. Maximum 3 shifts. Right? So pick a shift, stick to the shift, and have a backup shift you want to trade as well. So maximum 3 shifts. You don't want to trade more than that. So let's get a quick feel. Can't decide, lingering too long. Yeah, it's hovering, right? Hovering right above the zone. So one thing we know is if it continues to hold it, it's going to potentially bounce. If it doesn't respect it anymore, it's like this. And whenever you see support, okay. Whenever you see support, say for instance, price comes into a level like this, right? The initial bounce is a good bounce, and then it's like decent bounce, decent bounce, decent bounce. What this tells me is, yes, this is acting as support, but for the next potential bounce, if enough buyers don't step in and really push it away, a breakdown's on the table. I'm looking to do the opposite. You get what I'm saying? So if it bounces, but the bounces are not sustained, like this, you see what I'm talking about? Like we can see these bounces, but it's like a weaker bounce, a weaker bounce, a weaker bounce. If more buyers step in, it can just dump right through it, right? So look at that breakdown. We're starting to break down. So that 590 is like a wall. Right, so basically it's the exact same thing I just talked about. It just is playing out right now. Green on the day, quality on the trades. Absolutely. Great job, John. So let me know in the chat, did you join? Look at that breakdown. Retrace, reject on the table. So again, 40 likes, guys. We'll stay past 1 o'clock. 40 likes. Considering, so did you join Spy Strikes community? Answer the poll. Answer the poll, guys. Poll. Puts, exit calls with a loss. Great risk management. Vinkat. Answer the poll question. 40 likes is the threshold. And now, if you're looking to play retrace reject, the same logic applies. You can use a 20. You have room into here. If it reclaims, you get out. You get booted. Wait for some sort of, you wait for a wick. A wick back to the downside. Okay. If it reclaims, turns into a reclaim. See if we can respect that 50 and reject here. So I have no horse in the race, okay? Just observing. VIX is starting to tick to the upside. Added some puts here. If it breaks back above that 20, 589.47, 589.50, right? That could probably be the stop. There's a good chance it can retrace reject, guys. Again, if it stops you out, you get stopped out. Look at the wicks on the 5. So a lot of buyers are stepping in and they're propping up on the 5 minute. They're propping up the candles. Right, wick. So retrace, reject right here. This candle will tell us a lot. Close above 89.50. Stopped out. So in this case, if I took this trade, I get stopped out. Right? If we get that close above 89.50, getting that close, then you get stopped out. So if it's wicking, you can re-engage. That's the approach I take. I'd rather get stopped out, reassess, re-engage, than hold through the whole thing. Because it's too risky. It's too risky for me. So it did wick. That 20 is in question. If it breaks back below that 599.40, it can slide. It's starting to look good now. Starting to look good. There you go. Look at that. So if you get that close below 589.25, this thing can really slide. So if you want this thing to really start sliding, close below 589.25. You can use this candle's highs. No go, gonna walk away till J. Powell. Yeah, JP will be talking. Uncle Powell will take the stage at 1 p.m. So if you want to hear that, if you want to get the commentary as we navigate those conditions, make sure to like the video. 40 likes. All right, 40 likes. So we're officially in fourth shift, guys. So fourth shift. Again, do your due diligence. How many trades did you take? In my case, I took 2 trades. Both trades worked in my favor. In second shift, took no trades. First shift, took 1, 2, 3, 4 trades. Okay, so out of 6 trades, 5 worked in my favor. All right, so in this shift was green. No trades here, yellow, green. All right, so I highly, highly encourage everyone to do the same thing. So how many trades did you take between this time period, between 11:30 to 12:30? And now we're in fourth shift. Okay, and if we continue to show some strength here, what I'm thinking is this 590 break. It looks like we want to break this 590. Right? It looks like the bulls are not done with that 590. Right? That's what I'm thinking here. So make sure to like the video. Oh, ABCD. ABCD is also good. All right, the ABCD pattern. I used to use that a while back. I used to use the ABCD off the VWAP. Anyone use the ABCD off the VWAP? That's a good setup. That was a good ABCD. Early on, I used to use the ABCD and along with the 9. 9 crosses above VWAP. You get a candle close on the 5. I enter. So those are my 3 setups back, like way back when I initially started. So a 9 cross back above VWAP to the upside. 5-minute close above the 9. Calls. We get a 9 close below the VWAP to the downside. 5-minute candle close below the 9. Puts. It was a very simple setup. That setup can lead to profitability, but back then I just didn't have the right mindset, right? The right mindset to thoroughly execute that setup. So let's see if this has enough fuel to get to 590. 590 quickly approaching. So if you're trying to play that 590, you don't want to have your risk too wide. Significant decrease in the ATR. We're moving 64 cents per 5-minute candle now. If you want to have a pretty wide risk, this is about a 2-to-1. Right about 62 cents for $1.12, less than a 2-to-1, probably a little over a 1-to-1 at 590. Keep in mind, we're inside on the day. Where are we on the hourly? We're right here. Above that 588.80, 589.25. And look at that nasty candle. back to the downside. So make sure to like the video on YouTube. We're at 36 likes, guys. 36 likes. If you're on the stream usually goes until 1 p.m. If I'm gonna go longer past 1 p.m., 40 likes is the threshold. All right, that's very achievable. Very achievable. But the bulls are protecting that level. They're protecting that level. They're protecting that zone. Okay. See what takes place here. So J. Powell in less than 30 minutes, in 23 minutes. J. Powell. Okay, we're back above that zone once again. Bulls are they refuse to give that up. They refuse to give that up. If we can go 3 up here on the 5 minute, this will tell us a lot. Look at all these wicks here. We come into a wick out, wick out, wick out, wick out. I'm telling you guys, that 590 break could potentially take place. All we just need is the VIX to fall. If the VIX falls, 590 break can lead to an explosive move. Again, it's not financial advice, just an idea, just my own analysis. All right, so we'll see how it plays out. And once price does get there, I'll consider. We'll see how it plays out. Anyone looking to play that in the 590? 590 breakers. Man, this price action is significant slowdown, guys. This 5 minute candle went sell block. It's still inside on the hourly. We're about 10 minutes out until we get a new hourly candle. We can either go 212 continuation, 212 reversal. The VIX is essentially stuck here. Take this off. We'll address it when we get there. This is what we commonly seen in May. We will have clean action off the opening drive, a couple of clean moves, and the rest of the day will be sporadic. It would be a couple of clean moves from level to level, and then a bunch of chop. So keeping your entries and your trade ideas near these key levels can be the difference between being green or being red on the month and red on the week. Okay? So keep your entries as close as possible to these key levels. Keep your the points where you get invalidated as close as possible to these key levels. If you're just trading in the middle of the void, right, you're going to get chopped up. Very rarely does middle of the void trading lead to profitability. $5.90 and beyond, that's what I'm waiting for. If that takes place, I'll take advantage of it. Right. We'll stay until we're at 12:30. We'll stay until maybe 1:30. Okay, so if you're in the private community, we'll stay until 1:30. Just to see the Powell reaction. All right. Where's 1:30? Yeah, 1:30. Until the conclusion of fourth shift. Right, so if you're on YouTube, if you want us to extend the stream until then, we usually run until 1 p.m. Make sure to hit the like button. Let's get 40 likes. You're 4 likes away. If you're a first-time viewer, we go live every single day at 9 a.m. with the most comprehensive pre-market program followed by live trading. So a lot of the action takes place for us between 9 o'clock, right? 9 o'clock and 10:30. That's the most important part of the show. If we even narrow it down, I would say from 9 o'clock all the way to 9:45 or 10 o'clock. Mr. G, take a break for 5 minutes. I'm going to smoke. See if this can bounce. Starting to break down. Anything could happen here. There's no real edge. If you're using the 5 minute, potentially go 3-2 continuation. If you're using the 1, can go either way. We're below the moving average, the lower time frame moving averages. VIX is starting to pick up some steam. So there's real no edge. If we do break down, use your moving averages as your risk. Target 588.97. Okay. Just can't create separation away from here. So this is where we're having a hard time. So we need to get out of here for us to make an expansive move. For us to make moves within the range, that's very reasonable. Right, we're starting to break down here, right? But for us to make an expansive move, an expansion, right, we need to get out of here. If this thing continues to break, retrace, reject, back to again, back again, retrace, reject. So again, guys, make sure to like the video, make sure to subscribe. Answer the poll question. I want to get a good feel for how many of you have executed and joined the community. We have a ton of people in there, of course, already. So vote. We have 36 people on the check-in on YouTube. 36 people on YouTube. And we have how many? What platform are you using? I'm using TradingView. Okay, so make sure to like the video. So most of our work is done. Most of our traders, most of our community, they already feasted here, right? Members in our community, if you give them an opportunity like this, right, they're ready to capitalize off this and feast off this. Okay, if you give an opportunity like this, we're ready to feast off of this. All right. They know what to look for when we get action like this. Okay. So now it's just a matter of learning how to hold on to what you got here and not giving it back there. So kudos to everyone who got this, even the retrace reject. All right. I was a little slow on the retrace reject. I tried to catch it there, right? But I'm telling you, caught the retrace reject there. Beautiful slide to the downside. Okay, some of you played that bounce here. So it's been an awesome, awesome day. So the main thing is, the first day of the month, first day of the week, you're on the right side of the tracks. So use this as positive momentum. Don't let this allow you to get too ahead of yourself or too confident. You have to be confident, but you don't want to become too cocky. Okay, so we still have a lot of ground to cover for the week and for the month. So just build on the positive momentum we saw today. Okay, use that as a foundation. All right, use it as a foundation. We're back above the zone. $12 minutes until this hourly candle closes. That coincides perfectly with 1 o'clock when Powell speaks. See if I can find where Jerome Powell is speaking. Okay.
Steven, you just invest.
I was able to find it. Here we go. So the 75th anniversary conference. All right. The Division of International Finance. 75th anniversary conference. All right. So once that kicks off, again, 40 likes. We'll stream it live on YouTube. All right. If we don't get 40 likes, I'll be live on the community. 2 likes away, guys. 2 likes away. So let me see if I can change the title of the stream. So if you're a first-time viewer, welcome aboard. Make sure to subscribe. If you're a long-time viewer, make sure to join the private community to accelerate your learning. All right? Okay, so let me just get prepped here. Okay, see if we get some traction here. All right, we're about 10 minutes away, guys. So put in the comments, what do you think is going to happen? What do you think is going to happen? What time does Powell speak? 1 p.m. EST. 1 p.m. EST. Let me know in the comments. Does it market pump? Does it market dump? 42 likes. Okay, we'll stay until the Powell speaks. Okay, so we'll stay that long. So in the meantime, I'm going to take a quick 10-minute break. Okay. So I'll be right back. Let me just go refill on some coffee. I'll be right back. So I'll be back in about, give or take, 8 minutes, basically before Powell starts speaking. All right? So I'll be right back. Okay. I'm back. All right. Looks like we broke above that 590, and we are retesting that 590. But that was a beautiful break. Downward compression right off of that zone. Bulls were able to break out of that. So we're about a couple of seconds away from the speech. When it goes live, I'll play it. So it hasn't started yet. All right. Does anyone have any link to the speech yet? So the speech will be live on the channel. So nice retest. Anyone catch that break anyways, by any chance? We talked about it possibly breaking. We talked about how this can be the nice launch pad for that break. We're at that 590. If you are in position, just lock in profits where you need to. Things can get dicey in the next, once the speech starts. Okay, so the speech is scheduled for 1 o'clock. So if you're joining us to watch the speech, we're going to host a speech at 1 o'clock. As soon as it kicks off, we'll be live. So it looks like they're live right now.
Conference of the International Finance Division of the Federal Reserve. It is a great pleasure to see so many familiar faces and friends. 3/4 of a century ago, the IF division was born out of the recognition that in the post-war era, the U.S. was going to be at the center of the economic and financial markets and currency of the economic world.
Took that retest. Good job.
Given this, understanding the international forces that affect the United States was becoming vital to meeting the Federal Reserve's domestic mandate of maximum employment and stable prices. To have a deep understanding of these international forces, trade, the current account and financial accounts, foreign inflation and growth, commodity prices, the dollar, was not going to be easy. The division was going to need to attract exceptional talent, to conduct exceptional analysis, and to develop exceptional tools. And it needed to be able to deploy all these assets to support the FOMC in understanding and responding to cyclical and structural developments, as well as international crises. This conference is a recognition of that achievement. Today and tomorrow, we will celebrate the exceptional accomplishments of the IF division. We will celebrate the dedicated staff who have contributed to the rich and inspiring environment, some of whom have stayed their entire careers here, becoming leaders at the board, and others who have become leaders in academics, in business, and in policy institutions around the globe.
But in the meantime, let's admire that 590 retest. 590 retest,
through the academic
textbook
portion
retest.
of the conference,
This is
we
how
will
you want to
celebrate the
approach
vital
resistance
importance
breaks.
of research
Whenever we have
on
resistance, we
topics
talked
such
about
as
it earlier,
international
whenever we have
finance,
a resistance, this is how you're going to
international
play the
open
break.
economy,
Let it break,
macroeconomics,
going to play the
and
break and hold
international
great.
trade.
That retest, that
This
moving average
research
comes in
and
right
the
underneath
intellectual
it.
rigor it brings to the
Textbook
analysis
A+ setup.
and the model
For all my
building of the
retest,
IF
for
division
my resistance
is
break
critical
traders,
to achieving the
this is one
division's
you need
and
to
the
add to your
Fed's
playbook.
mandate.
Okay? How do you
We will
approach
also
resistance breaks?
celebrate
This is
the
way.
sense of mission and
Alright.
collegiality and friendship
break
of
of
the
that
staff
590.
throughout the decades that make it such a delight to gather here together today. There is no better person to kick off this conference than Chair
Wish I was
Jay
more
Powell,
confident in playing my
who from the
you're charging
start
us
of
and
his
JB.
tenure at the
Confidence
Federal
comes over
Reserve
time.
Board has been a supporter of the International Finance Division.
I'm
The
watching
chair
the
has
stream
long
on, YouTube.
recognized the U.S. economy,
I'm watching on
financial
YouTube.
markets, and the U.S. Central
I go
Bank
onto the
around
live
the
stream.
world.
I'll drop
He
it
is
in
a
the chat.
remarkable and respected leader among his peers across the globe. Please join me in welcoming him to the podium to open what is sure to be
Okay, looks like Jay Powell is.
Thank you, and thank you, Beth Ann. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also a trusted and generous mentor and a teacher to a generation of the most important economic thinkers, including many heads of global central banks, advisors to presidents, and countless economists. And I know all of us who knew him will miss him. So, congratulations to the Division of International Finance, IF in these parts, on 75 years of outstanding work in service to the Federal Reserve Board and by extension to all Americans. Many current staff members are here to celebrate today, as well as a significant number of IF alumni, including past division directors Ted Truman, Karen Johnson, Nathan Sheets, and Steve Kamen. The division has also produced many other notable alums, including, not least, Chair and Secretary Janet Yellen, Professor, author, chess grandmaster, and our keynote speaker, Ken Rogoff, and humanitarian and economist Albert Hirschman, famous for the Herfindahl-Hirschman Index, and more recently, perhaps a little less famous, as a character in Netflix series Transatlantic, to name just a few. We keep close track of these things. In my time at the Fed, the IF division has provided invaluable insight into global economic activity, international trade and capital flows, and developments in foreign financial markets. Division staff have also played a key role during episodes of global financial stress. And your research and analysis are critical inputs into our monetary policy decisions. Thank you to all that have served in this division over the past 75 years. Today, I'll kick off this conference by briefly reviewing why the division was created in the first place and highlighting a few of its many accomplishments over the years before turning you over to a robust set of presentations and panels. So, the IF division was created on July 1, 1950, but the idea began to germinate a few years earlier. The U.S. had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic. IF helps produce the data on international capital flows and has spent decades researching the effects of these flows and international trade on U.S. and foreign economies. Understanding this complex and interconnected web is essential for us to anticipate the path of employment and inflation. Another important development in the 1970s was the increasing use of macroeconomic modeling, which greatly influenced the division's work.
If we can retest the 600 and that 50 catches up to it, I'll potentially look to go long, take advantage of that void.
Always on the forefront over the years, economists in the division, many of whom are in this room today, developed increasingly sophisticated models, with each new generation expanding the capability to tackle the international risks and issues of that day. These models have proven useful for understanding how international shocks transmit through the economy and financial markets, for assessing risks and uncertainties through alternative scenarios, and for better comprehending the implications of various shocks for the U.S. and the global economy. The results have informed research papers, board memos and briefings, as well as the risks and uncertainty assessment that FOMC committee participants receive in advance of every meeting. The IF division has also played an important role in responding to global economic turbulence. A prime example is the Latin American debt crisis of the 1980s. That episode required analytical thinking about the macroeconomic repercussions of the crisis as it played out around the world. Work by the division and by the IMF and other institutions led to the establishment of emergency facilities to prevent more dire financial outcomes. As global capital flows increased, other episodes of financial distress surfaced across the world, including in Mexico, Asia, and Russia. International capital flows and spillovers became and remain a recurrent feature in the division's analytical and monitoring.
591.12, we're on a pursuit. That's the runway. That key level is at 590. VIX completely breaks down here. It takes out those lows. This can start really pumping, guys. This can start to pump. Right now, we're just legging higher, legging higher, legging higher. If we can pull back slightly, that would be the chance. But the opportunity really came once we broke it right here. Right, so that opportunity really came above that 590. And now see if we can pull back slightly, maybe come to that 20. Right, but it looks like we might be a little late to the party or get some sort of accumulation break.
IF worked to establish swap line arrangements with several major central banks that helped restore stability in U.S. dollar funding markets. And of course, during the pandemic, IF division helped lead efforts to expand the provision of dollar liquidity by setting up the FEMA repo facility. These periods of acute financial stress and uncertainty prompted the division to develop new tools and analytical products that could be used to understand and respond to the events unfolding on the ground. For instance, the division has devised new methods to measure and assess the effects of various types of uncertainty on economic activity, including new indexes that were built to track geopolitical risk, inflation, trade policy, and economic uncertainty. As we continue to navigate the current period of heightened uncertainty, this work is critical to understanding the quantitative implications of uncertainty shocks, certainly relevant today. So I'll conclude by saying that for 75 years, 9 Fed chairs and countless board members have greatly benefited from the guidance and counsel of IF staff, and not just when responding to crisis. This team helps to assure that we're well prepared for our international engagements by providing us detailed, some might say extremely detailed materials ahead of time, and often by traveling with us. IF staff are always welcome and productive companions. In these and other endeavors, we benefit from the robust relationships that you establish and maintain with our global counterparts. So, thank you to Beth Ann and to all the staff here that organized this wonderful event. And finally, thank you again to all the current and former IF staff for what you have done and continue to do to help us be a globally knowledgeable and responsive central bank so that we can deliver on our dual mandate for all Americans. Thank you very much.
Okay, that concludes Powell's remarks. Very, very strategic remarks. Doesn't want to give too much insight on the economy. Right.
Of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed.
Okay, so that concludes the speech, guys. That concludes the speech. Right. So he's very cautious on what words he uses, which he should be, right? The market can move in any direction. But the primary thing is, right, that 590 break. We knew it was coming. Bulls decided to use this zone as a way to really catapult us past that 590. We come into a break. We hold. Was waiting for it, stepped away temporarily. Took place. Doesn't mean I'm going to chase it. If we can come back into it, I can re-engage it off of that 590, right? Along with that 50 trailing right behind it. In pursuit of that 591.12. Right, 591.12. So make sure to like the video on YouTube, guys. Make sure to subscribe if you haven't already. We'll run until 1:30, and then we will finish off. It's just a replay. We'll just finish off the show. So it's been an awesome, awesome show. Textbook retest, textbook break and retest of that 590. All right. Holding 13 EMA. That was a Powell nothing, absolutely. He didn't say much. And I don't blame him. He has to be very careful with his words. Right? He has to be very careful with his words. Okay. The question is, do we give back that pump? Do we give back that pump? Do we give back that pump? If we come into that 590, I'll be there for a quick scalp, short-lived scalp. Is it just a pump for Powell and then dump? Right. I still like that bounce with that 590 along with that 50 previous resistance and support. Right. I'm going to use a little small size there to just take advantage of that bounce. See if that can happen. If it does, great. If we give up that 50, then we get invalidated. Right. But I want price to come in a little bit lower, about 9 cents away. A dramatic drop in the ATR on the 5 minute. We were trading about $1 and some change to kick things off. Now that's been cut in half. All right, that's been cut in half. That has been completely cut in half. Just shy of that level. It came into first shift highs. If I just extended it a little bit higher, that's where it came into third shift highs. Look at that bounce. If you use third shift highs, right there. You take that bounce, and use that 590 in conjunction with that third shift highs, and then boom, quick scalp. That nice little move, right? It can easily be, depending on your entry, you can easily get double digits in a matter of seconds, right? So my approach is at 590, and look at that candle right there, and I'll use that 50. Breaking close below that 50. Seeing some weakness on the 5. We're starting to go shooter on the hourly. This hourly candle is still young. Look at that nasty candle. Piano keys right here. So we dump, pump, dump. See if we can get one more trade off before we wrap up. Make sure to like the video, guys. Make sure to subscribe. And click the link in the description to join the Discord. Okay? Discord is available. You get access to everything you need to unlock consistent profitability. Our team on the Discord absolutely crushed it today. So kudos to everyone. There's a low probability, I'll say a C to B setup. So if you're looking for high quality setups, if your motto is a quality over quantity, this might not be it. Okay? Your work should be done from this morning. So we're going piano keys here. Back to the upside. See if we can kind of unfold for a quick scalp. If it does, I'll take advantage of it. And then we'll wrap up that'll be our 7th trade. So out of the 6 trades we took, 5 worked in our favor. See if we can make it 6 for 7. And then we'll just wrap it up, guys. Okay? We'll wrap it up. First day in June. Great job, guys. Great job. No. I'm not swinging anything. No swings from BJB. Just a scalp. No swings. The closest thing I have to a swing is the leaps, the Disney leaps. Right? I have not swung trade anything. The closest thing I'll get to a swing is a leap. There's too many gap ups and gap downs. Right? There's no real edge. So swing traders are having a hard time. Right? Swing traders are having a hard time. It's really gap up and gap downs. Right, it just neutralizes swings. So it's a very low probability environment for swinging. So it's either you have to be intraday trading, preferably scalping, I'm biased, of course, or you have to be using leaps. I think that's the only way to really approach it as far as trading is concerned. Consolidation over consolidation, sort of like this. Yeah, I can see that. Right, I kind of see this accumulation break, right? A nice little upward compression break on that 20. In a perfect world, of course, nothing is perfect. That's what I would like. All right. That's what I would like. So that 590, the fact that we got above that 590, spent some time above it, what I'm betting on is I'm betting on the bulls are going to do what they can to protect it. Right? If they do all this, protect this level, my logic is once they get above a level that was resistance, they had a hard time getting above. But past this 590 is not just a level from today, guys. Okay, so if you've been watching, you know what I'm talking about. But if you haven't, this 590 stems from last Wednesday. Okay, stems from last Wednesday. Yeah, I think retired Final might be swinging. He's good at further dated contracts. He's really good at that. See if we can come into that 50. Come a little lower. Come a little lower. One more pump. One more dump. All right. That might be the entry. All right. See if I can get a little lower. I'll take it right there. So take the 590 bounce, retest. Higher risk bounce, 590. See if we get that push higher. Up 1%, 2%. Now on some follow through to the upside. Break below 50, 559, 589.97. We'll get stopped out. So in the position here, currently flat, down 3. Okay, down 5, down 4. Let's see if we get a bounce here. Close below that 50, I'm out of there. We're starting to get a little jerky here. I gotta get out of there. Okay. Stopped out 10%. Okay. When we start getting a little jerky and time on sale starts speeding up, gotta get out of there. All right. So gave it a try. I liked it. I like that 50 holding. If we can get back above it, I can reassess and re-engage. And we can hammer out of there. Because it's the 590. I can give one more attempt. See if we can go 2 down, 2 up. Stopped out 10%. If we can't stay above it, then more than likely we're going to start breaking down. Okay. I'll just let that be. So stopped out 10%, tried to get that bounce. Violated my stop, stopped out, and that's pretty much it. If you're looking to re-engage, you need it to get back above second shift highs. All right, second shift highs. So the idea didn't play out. Primarily, this was the idea, the best idea, and now we're basically back to where we were before the quote unquote short-lived speech. Okay, so stopped out, invalidated, said the 50. Or below it, so no longer there. So 10%. So I tried to take one more trade. And this is first, second, third, fourth. In fourth shift. Very rarely do I take trades in fourth shift. Okay, so stopped out there. That puts me at a 7 and 5. Still green. Gave back some profits there a little bit. Right. But we're gonna wrap it up in about 7 minutes. Okay, so make sure to like, guys. Make sure to subscribe. And make sure to join us in the Discord. So there's about 32% of you who are considering joining. Okay, 32% of you who are considering joining, and 16% who have not joined yet. Right? If we can get above 590, this thing can rocket. Okay, but I think it's just a lot of choppiness. Right? But 590 can rocket after stopping me out. Again, when you do join the community, guys, we're gonna wrap it up here. Right? There's 3 tiers you can choose from. You can choose that weekly pass. You can choose the technical only bundle. You get access to my technicals. You get access to my indicators. You get access to the real-time analysis with the charts. You get access to the entirety of the Discord as outside of the 500 plus hours and the live trading video. But if you want the full bundle, this is where everyone in the Discord's on, is here. Okay, you get access to video, live, high win rate trade ideas, my ebook, automated technicals, 20% off future courses, 500 plus hours, pre-market game plan, post-market, a weekly recap, a ton of things. So make sure to take advantage of whichever one suits your commitment level, right? and we'll take it from there. All right. So looks like we're reclaiming that 500 after shaking me out, of course. Right. That's about a 27-cent risk. Right. So that's still not a bad risk, but now we're back to the upside. If we can hold above 500, get above that 590.14, this thing can accelerate. We just need the VIX to fall down. Okay, so we'll wrap up here, guys. So if you have any questions, drop it in the chat. If not, we're going to end it here. It's been an awesome session. A lot of you saw some big gains. So going into tomorrow, right, we're just going to come back down to earth. We're going to come back down to earth. For those of you who got the week off to a great start, the month off to a great start, don't lose sight of the entire race, okay? Don't lose sight of that. Okay, don't lose sight of that. All right? We have a long week to go. We have a lot of things we have to do. So protect your profits. Don't give it back. And we'll see you guys. We'll see you guys tomorrow. So let me know if you have any questions on YouTube. If not, we're going to end it here. Absolute pleasure as always. This concludes episode 59. Tomorrow's episode 60. I'll see you guys tomorrow, bright and early, 9 a.m. with the pre-market program, followed by live trading. So thank you for tuning in, guys. We'll see you guys tomorrow, and God bless.